नहीं बजे से एक ही तरीका
This meeting is being recorded.
Yeah, hi, good afternoon, everyone.
Hi, Vaibhav. Good afternoon.
Hey, hi, Chirag.
Very
Good afternoon, industry leaders. It is our pleasure to welcome everyone to the 44th Inflection Banking Tech Innovation Web Conference and Awards 2021, organized by Alden Global Value Advisors. I am Namrata Kumaya from Team Alden Global Value Advisors and will be the host for the day. Inflection is a series of web and physical conferences and awards across Delhi, Mumbai, and Bangalore. Today, we are joined by top technology, business, and digital leaders of India to make this conference an exciting communication platform for sharing best practices, the roadmap to the future, and innovative solutions. The conference theme is Rise of Digital Banking, Amplifying the Growth. Today, 150 plus CXOs and more than 350 plus attendees have registered to gain insights from top leaders. Now, I would like to start with the first panel discussion of the day. The topic for the panel is Steering Towards a Cashless India, Accelerating Digital Banking and Payment Systems. Here I call the moderator, Mr. Vaibhav Joshi from Equitas Small Finance Bank, Prasanna Lohar from DCB Bank, Nilesh Sangoi from Fincare Small Finance Bank, Chirag Jain from HDFC Bank, Ravish Bhatnagar from IndusInd Bank. Vaibhav, you can start the panel discussion.
Thank you, Namrata. So, good afternoon, everyone, and welcome to this, interesting panel. So, our first panel today is Steering Towards a Cashless India, Accelerating Digital Banking and Payment Systems. And I welcome, my fellow panelists on the panel. So we have Prasanna Lohar from DCB Bank, who is the VP Technology. He heads Digital Innovation and Architecture over there. Welcome to the panel, Prasanna. Good to have you here with us.
Thank you, Vaibhav. Looking forward here.
We also have Chirag Jain from HDFC Bank. Chirag heads the digital journeys for merchant acquiring for HDFC Bank. So welcome, Chirag, to this panel.
Thank you, Vaibhav. Pleased to meet you and Prasanna.
Same here, Chirag. And I think we are expecting Ravnesh Bhatnagar from IndusInd and Nilesh Sangoi from Fincare as well to join us. So we will wait for them. In the meanwhile, I think, we have been given a very interesting topic, steering towards a cashless India. And there is so much happening in this particular space. We have seen right from the days when, we migrated to CBS, we migrated to NFS, we migrated to CTS. These three, we migrated to the networks, Master Visa, subsequently RuPay. right from those days to the days when NEFT RTGS moved on to IMPS, and then UPI came in, AEPS came in, APBS came in, BBPS came in, and so many of these technologies came into UPI 2.0, eNash, and then so on and so forth. And I think there has been a lot of momentum that has happened in this space. There has been a lot of things that is happening in the Indian ecosystem when it comes to digital banking and digital payments. And I'm fortunate to be talking with all you distinguished fellow panelists on this topic. So I think, setting that context, why don't we jump into the panel? And I see that Ravneesh has joined us. So Ravneesh Bhatnagar, welcome to this panel. Ravneesh, a quick introduction. He is SVP Digital Banking for IndusInd. Welcome, Ravneesh. Good to have you on the panel.
Hi, Vaibhav. Hi, everyone.
So, Ravneesh, we have just started with a quick brief introduction, and now we are moving into the panel. So, Prasanna, let me start with you, and I would like to ask you. So, there has been a lot of things we see that you are doing around blockchain. In fact, you are seen as one of the thought leaders in the country on blockchain, and a lot on the digital banking side. But what we want to understand from you today, Prasanna, is what is your organization's plan for digital banking? Can you name some technologies for that you have in your mind for tomorrow, and the use cases that you plan to implement specific around those technologies, please?
Yeah, I think a great thank you, Vaibhav. When I had joined my bank, right, DCB Bank in 2014, and that is how we have seen in the Indian banking ecosystem, a lot of things started happening. So I'm blessed that I joined the banking ecosystem during that time. And the way I was looking at my bank, and while I was driving some of the projects on the channel side, upgrading internet banking or omni-channel architecture, or some of the new initiatives on mobile banking, I found that digital banking is not only meant for a bank, right? It has to be in collaboration with the other banks, or there are a lot of initiatives has happened during those days with Aadhaar and adoption of UPI, which we have seen in 2016, right? So as a bank, although we are driving our own digital banking area, right? So we often look at a framework called CEAT, like CEAT, which is like create and engage and act and transform. So CEAT, like C is transform, create, where we keep on creating the much more required ecosystem, so-called enterprise service bus, which was not there in earlier days, right? We have implemented in 2016-17, or omni-channel architecture, on top of which we can build our own channels on a mobile or internet or retail or corporate or various other wallets we were participating into those days. Payment ecosystem like UPI, NEFT, RTGS. So C has helped us to create a lot of COAs within our organization. Some of those, you were speaking about blockchain and or RPA or AI or big data. So we have created those a lot of center of excellences at organization level. While we are creating COAs, we have created a people or a skill set around those areas. So look at how we can really do work around that. While we are creating C or platforms, right, which will build a lot of activities, we engaged ecosystem with the program so-called Innovation Carnival. We started this program in 2017 with an aspiration that will become one of those innovation hub along with other banks and along with the regulators, and we'll keep on curating those fintechs for our use cases, as well as help other ecosystem to create some, say example, SME lending or good embedded finance or security. Like we were having around 35 plus themes to work on innovation. So engaging partners, engaging regulators, engaging other banks, so has helped us to understand how we have to move on to our digital banking. What is that we should do? So we then transform activity chart, right? Like we created a lot of projects around these two outcome of these two areas, and we are as on year we are implementing this project, so-called implementing Zippy, which is a straight-through account opening on whatever we have built on APIs, right? Or implementing a DCB remit, or India's first Aadhaar-enabled ATM, or implementing of retail and internet banking, mobile banking. So all those digital-savvy products, while we are building, and we landed up in the area of COVID, right? So I think our efficiency during COVID has gone at least 5 times. Our means like business plus technology team, what is that customers are looking at. And in a nutshell, what technology has helped us, I named upon AI, right? How can we build AI engine to understand customer sentiments, or how do we throw back notification for a external customer, he should do these many things, or as well as how do we really measure the employee performance who are capturing leads and converting those leads to actual customers. So we have utilized big data and AI heavily in that area. Some of the technique like RPA to transform operational. So we identified around 40 plus processes which are we acted upon that with RPA COE, and we transformed them. So these processes are running without man in middle as of now also. So, and that gives incentives. How can we furthermore identify more processes like reconciliation? There are a lot of back office process in a data center, in operations. So we are keep on migrating them on a cloud. I think we recently last year we gone live with video KYC, right, which is on cloud, and that gives more adoption and more knowledge for our IT security audit team. How do we really do the cloud adoption? So tomorrow core banking also goes on cloud. We will be ready to adopt those kind of ecosystems. So internally we are virtualized on 95% of our infra is virtualized on the cloud. So in a nutshell, AI, big data, RPA, cloud adoption. So these technologies are helping. As blockchain is gonna come, right? So it's gonna be a foundational technology. It will take its own time to get into banking, although it is very heavily implemented in other areas, right? Telecoms has provided a very good use case to India in a blockchain. So we looked at some of the smaller use cases. There is one RBI's mandate to open ATM. It should be automated process. So we implemented complete journey of the generation of password till expiry, everything on blockchain. So our SDLC members, right, QA, now they know how to really sign off blockchain kind of use cases also. So that bigger use case will come like trade finance or cross border, right? Eventually when RBI comes with its own agenda. So we are ready for these kind of things also. On augmented reality or virtual reality, we have done some POCs pilots to see the point of interest like nearby ATM or branches and so on. But ultimately, what I want to say that technology will come and go, right? So tomorrow 5G will come and will transform all the business models, right? The branches will be there, will not be there, will depend upon how agile networks will put on for our customers. So customers don't want to visit branches these days. We could have seen in the last 18 months how customer behavior has transformed. So one of our research group under Innovation Carnival keep on seeing which are those emerging technologies are coming. How can we do some kind of a POCs and pilots to the with the help of startups and fintechs, and be ready if something comes immediately. It's like projectizing that whole technology around some business model. Then we conclude that. So ultimately, C8 model is helping us. Ultimately, we keep on measuring that transformation index on year. Whatever we have created, whatever we are doing engagement, or whatever we are getting small projects. So this is helping us to drive the complete digital banking model at DCB Bank.
So thank you, Prasanna, for that interesting insight into how you are transforming digital banking at your organization. Couple of very interesting insights that you mentioned. One is your fintech carnival. Second is your RPA, where you have automated 40 plus processes, and I'm really interested. I'm going to connect with you offline to understand what all processes this involve. Video KYC on cloud, we have been having these discussions offline on how best adoption.
And main thing when I was saying, while I am doing digital transformation internally, we have to really look at how ecosystem has to come. So one of the project along with IDRBT, IIT Bhilai and METI, we are looking at how current video KYC, which I have built as a bank, can be beneficial for many other banks, right? I think you are aware, right? So the project which is going to come on video KYC and blockchain will give a lot of transformational foundational things so that we can do away with a lot of regulations around data localization or KYC relevant things. Yeah.
No, it is also important when that such path-breaking initiatives are actually taken at a policy level, because then it really helps the entire ecosystem. So yes, Prasanna, I do agree with you. I have a couple of I want you to do a slight more deep dive into the fintech carnival that you spoke about, because it's a very interesting concept. I have heard about a lot of banks coming out with their own fintech accelerators, startup accelerators, scale programs, and so on. How is it slightly different from that? Can you dwell upon that, please?
Yeah, so most of the banks create their innovation and the fintech. The way I have interacted with many top banks, how they are driving it. They drive it only for some purpose or for few months. This is what we have seen in 2017, 18, or 19. I think 20 was a filtering criteria, like how do you really filter out the fintechs and collaborate with the top fintechs. This is what the trend we have seen in every bank, right? I could see some of the innovations coming from a smaller startup where I'm engaging with some startup at Chennai. I was sitting across with him on a table, and that startup has helped us to create a very good SME app during the GST time, right? And we were ready in a flat 15 days. So that's the magic, I would say. Those 250 plus startups we had scouted in 2017 and 18. And although that those startups may not be helpful for me that year, but certainly I am seeing those incentives this year. So the application which I was talking about, ATM opening, the whole process we automated with one of those startups coming from the Innovation Carnival. So may not be useful that moment, but this program is having many more other sub programs like a startup graduation program, wherein we deal with a lot of colleges to hire talent as well as to create an entrepreneurship to build a startup within 3 months, or some of the mentoring programs wherein we connect with a lot of domain experts and mentors, and whenever it's required to brainstorm some of the areas, so we invite them within a bank or maybe outside of the bank, we can do those programs. One of those things we participated with the World Bank, right? The World Bank has a aspiration around to do one regulation or a recommendation by Maharashtra government to utilize recycled water. So, right, we collaborated and we come up with the idea and MFEs with IoT and blockchain. How can an organization or auditor comes to the organization can see at a 10 o'clock this much water was utilized as a recycled, because what that particular data cannot be tampered under blockchain. So likewise, I would say lead management, the one which we scouted in 2018. So that is now getting implemented in 2021, right? So that kind of startups. And moreover, Vaibhav, when we do hackathons, right, overnight 30 hours hackathons. So that moment we have seen one or two startups collaborate together and form another startups and a sustainable startup, right? Wherein we co-create some of the products with them and we help them for investment angle or co-creation of launching along with the DCP. And say example, one of the startup has started their API journey today with us. And now that startup has reached to that level, they are now going for an account aggregator license, right? So that's a angle which we see how the startups can grow with us, as well as while we identified they are going to be growing startups, we invest them like open or there are grows, right? So they have started their journey with us, and now they have become quite big, right? So that's a beauty which we identified. So we didn't keep it only for 3 to 4 month exercise, rather than it should be a continuous innovation generation exercise. Incentive of that, internal people like business people, or they started now understanding how do we collaborate with the fintechs. Earlier those days, right, when I bring some startup fintech, they used to say we have a lot of work, right? What is the need, right? So I think that culture changing exercise which we have seen within a bank, and now within a bank also we are crafting some of the programs to cultivate ideas, right? So it's like building or like transform, right? We are transforming bank to the next level. Innovation Carnival may not have helped directly from a fintech or a startup angle, but that has given a lot of culture changing exercise or culture changing momentum in the bank.
So fantastic, Prasanna, and I can resonate with you when you say that you are not running a cohort and it's a year-round activity.
Yeah.
Because I remember 2017 when we had launched Yes FinTech, and subsequently
Yes.
2019, yes, when we changed it to Yes Scale, and
Yes.
so recently in my new avatar with Equitas also we have launched something known as Equitech, which is also a fintech accelerator.
Yeah. I
Yes.
think it's a good, very good. I think some point in day we should collaborate and see how we can really bring some of those much more needed use cases for ecosystem. Yeah.
Definitely. So thank you, Prasanna, for that. The detailed explanation on my question. I will move on to Ravish. Ravish, the same question for you. What is your organization's plan for digital banking? Can you name some technologies for tomorrow and the use cases that you plan to implement as a as a plan?
Sure. So, Vaibhav, in terms of at least as a plan, I'll not limit it to my organization because see, I've been my majority of my career actually has been at a consulting firm. So I'll talk about some of that experience, and I'll talk about what I'm doing currently, right? So it's a mix of both, because there are
So,
lots
so
of things
then
that we have it in plan.
So then, Ravish,
Because
let me interrupt you. Let me interrupt you,
sure,
and let me ask you one question first. I understand that you were earlier on the consulting side, and then you have moved on to the banking side. So
yeah,
let my first question be a follow-up question, and instead you let me ask you, how are you
sure,
finding it on the other side of the table? You have been on the consulting side of things. You have looked
yeah.
at the entire industry from a 10,000, 30,000 feet view, then a 10,000 feet view, and a 1,000 feet view. Today you are at the ground level. So how are you finding that? And then you can move on to your plans.
Sure. So see, it's actually a very different change, right? Because in a consulting environment, what you get is you get to understand what is happening across the world, right? You're at the center of the knowledge, right, as to what is happening across the world. If you want to become an expert in a specific field, you have access to all the kind of knowledge, right? But what gets missed out is actual implementation, because you need to find for projects as to if this is the area that have an expertise in, right? For example, I started developing some expertise on the digital transformation bit, customer journey enhancement bit, and also on advanced analytics. Now, if I need to find any of these three projects, you need to actually scout for those projects, right? Because the projects happen across the world, right? So, and it's a demand and supply sort of a match. Now, in consulting, what you get is basically the expertise. You try and understand what is happening, but what you don't get is actually implementing it on your own, right? At the end of the day, you are as good as your client is, right? Because if you are not able to, if your client and you put together are not able to implement something, it's the project has not succeeded, right? So in the end, it is very difficult to take end-to-end sort of an ownership for any solution or any transformation exercise or any digital business that you are building, right? So I think that gets missed out in consulting. Somewhere that is where you keep wanting to go out there and do it on your own. But when you come onto the other side, I think there are things you get the mandates, right, which in digital right now we all have, right? I think all the panelists right now, you are looking at the entire thing in Equitas. You understand, the kind of mandates are just they are just across the horizon, right? From building a new digital business to actually ensuring that all the digital channels of the bank are performing at the rate that they have to perform, to setting up new products and continuously innovating on products, because customers these days demand a lot from a product perspective, and we need to ensure that we are catering to their demand, to ensuring that performance is managed and performance is at the core of whatever we are delivering, to also setting up pretty cool new innovations like design at the core, right? A lot of organizations never had design per se as a specific practice. So I think the mandates are pretty huge, right? Now on the other side, in consulting, it was easy to say, you have to do these 5 things. But when now you're on this side, when you know that there are these 5, 6 things, I think it's pretty interesting. While it's fantastic uh, from the mandate, the scale, and the kind of things that you end up doing, you wouldn't have done it in consulting, right? Because you're not doing them grounds up. I think what the challenge is now is talent, right? Because now and in consulting, it's easy because you are doing one project. An organization can put like 4 to 5 to 7 to 10 people on a project or maybe more. But because it is the most important project or one of the more important projects for the organization, your view is actually this, right? But when you come into the role, right, your view is like it's expanded manifold. So getting the right talent in the current setup, when the banks are at least competing with e-commerce industry and fintechs, I think that's where the challenge starts coming in. Getting the talent, holding on to the talent. I think it becomes more. I think the challenges become very different, right? It is not just the strategy, the content, what you want to do, but also how do you want to build the entire organization.
And it is across the board. That is happening across the entire BFSI today. We are seeing a lot of churn.
Yeah,
We
yeah,
have to really go scout for the right talent and so on. So I can resonate with what you are saying, Ravish. Now coming back to the question, what are your plans from a digital banking point of view? What are those key technologies that you're looking at? Some use cases that you're looking at building from a
sure,
futuristic point of view.
sure. So I'll talk about at least first the guiding principles, right? I think it's essentially extremely important for organizations to understand what are the guiding principles that they should go by. Because see, every organization is different, and every organization runs after certain goals, right? Now, in order to fulfill those goals, you need to have certain guiding principles, right? So, at least within what we are doing, we are going by at least there are four guiding principles by which we are running the entire set of digital banking agenda. One is ensuring that at any point in time we are able to provide a seamless customer experience, the most simplified of journeys to our customers, right? If the customers are not, if the journeys are not very simple, in the end the customers will never get to or want to use it, right? I think in banking, somewhere because of the regulations and because of a lot of other things that happen, we tend to not work on the simplification of journeys. I think that is one of the golden mantra that we have, at least we are doing, and that's number one. Number two is, as a bank, I think we have been at the forefront of industry first features, right? From fingerprint banking to introducing features like my account, my number, to actually being along with Kotak being the first bank to introduce WhatsApp banking, being the first bank in the country to introduce Alexa banking, to now being the first set of banks to do the FIP and FIU, in the account aggregator space, right? Building use cases also around it as we deepen it. Uh, and not just that, there are a bunch of other industry first features that are there in the pipeline, because what we are doing right now will only come in like some 6 7 months, 8 months down the line, right? So industry first feature has always been a DNA, and that's what we are focusing on, at least because that gives us a cutting edge innovation, and also gives us that space to talk about that. This is a DNA that we have built on for the past decade, and we are continuing to build it on as we go forward. Right. Number three is, as we do simplified journeys, seamless customer experience, and industry first features, we will keep performance at the core. Right. If if the app response time, if the app login and launch times are not less than 2.5 seconds, if they're not at like 1.5 seconds, which is the best in class right now in the industry, there is no point, right? If your apps are taking time, your pages are taking time, and by the way, across the banking industry, I think we are just coming to or understanding this concept, right? I think fintechs were always very, very early. They understood the page performance, right? If you things like even understanding the page performance, right? If you look at Zerodha right now, Zerodha, and you just use some of the tools that are available on the market, right? You look at Zerodha, you put it on a Google Insight, there any of those pages, those will be at a 90 plus scores, right? You put any bank out there right now, and when I say any bank, right, they will not be more than 50 to 65, right? 50 to 65 would be actually banks would be happy ki, my page score is actually on Google Insight. This is the load time. It talks about first interactive time, so it does a bunch of other features, right? But Zerodha, for example, uses all the right things, right? Which is the next gen formats. It ensures that there is no redundant code, there is no header or footer which is not utilized. A bunch of things which should be required, by the way, when you are building any digital asset. But any bank out there right now has these scores not more than 65, right? Very few banks will have their let's say customer journeys for personal loan, credit card, etc., having scores more than that, right? So ensuring that we try and aim for that. Where we started was different. Now where we are is actually different. But performance at the core is essentially extremely important. And the other thing is, as we grow these digital businesses, the fourth guiding principle is keeping efficiency also at the center of things, right? So, for example, we acquire a lot of customers through through digital marketing, through sourcing it. This is a non-physical sort of a journey and acquisition. But keeping the efficiency, because at the banks we obviously don't have. We will always be accountable for every moolah, every money that we spend. I think that becomes extremely important. So these are the four guiding principles that we go by. Now, having used these principles, I think let me just talk about a few of the things that we are doing, which is helping us scale. For example, design, right? I think ensuring that design. I think first major thing is a bunch of design labs that we are trying to set up in the process of it, are helping us move forward in the ensuring that our customer experience is completely seamless, right? One of the things that we have recently done is, for example, our app used to be rated on Android, 3.8, right? When you go there right now, it will be rated between, and this is 3-4 months back, right? Right now, it's rated between 4.3 and 4.4, right? Always. It just obviously it's right now reached at that level, but it tends towards 4.4, right? But we have managed to achieve that by putting a proper design sort of a process, by putting a proper UX strategy in place. I think some of these things are important from a futuristic point of view. And what we do is we keep running this back with the customer, right? So we run these very interesting usability testing labs where we whatever major thing we want to go out there in the market, we run it. It's a very simple thing, but it's actually difficult to execute it for the first few times. Once you ingrain it as a part of your DNA, it becomes very, very easy. But one of the things we do is usability testing labs, right? Running it past the customers, because we believe that customers know best. We might have a hypothesis, but customers end up validating or rejecting the same, right? So that's what we do, right? Design is essentially at the core of now what we are doing, right? Number two is we are also, for example, one of the things that we are looking at is personalization at the core, right? So things like eventing architecture, marketing automation, trying to build a metadata layer, even at a level where across all assets can use that. So personalization becomes essentially extremely important for us, because at least we feel that you can replicate the technology, you can replicate the channel, you can replicate the product, but it will be very difficult to replicate the personalization, the experience of personalization, right? And I think that's something that will be very, very specific to each of the organizations as we go forward. So that's the second important thing that we are doing. Number three is, one of the things and one of the big shifts for us is how do we, make more reusable journeys, more reusable architecture, more modular architecture, and more scalable architecture. So in order to do that, we are actually investing in setting in place microservices, across the organization, different places, microservices backed architecture. Along with that, and hence when we set these in, the idea is that, for example, every single service, for example, it can be a PAN Aadhaar name mismatch service, which you build for one particular journey, then you reuse it across, right? You don't need to recreate it again, right? Similarly, the idea is that how do you get development faster out there? So we are focusing on micro front ends, and the idea is that to delink the entire development together, and you are able to work in different squads and move forward, right? I think that's again a path that we are on. It's not like we have completed that, but that's a path that we are on. It's a longish path, but it will be extremely important if once we have closed this particular area, right? So I think that's the third bit, right? As I said, number fourth is also important, but we are not fully obviously going there. But what we call in the technology world as composable banking stack, right? Which is a new. I think today you would have read the news about JPMC taking on Thought Machine, right? Thought Machine is basically a equivalent of Finacle. Every Indian organization mostly is still on either Finacle or FlexCube, or it's TCS's Bank One. So some of the older, at least, and much more stable platforms. But yeah, those still have, while they are very, very stable from a regulatory point of view, etc. But they don't get you the kind of flexibility or agility that is required in the modern world, right? So you saw today, at least in the news article, where JPMC has taken on a composable banking core, right? Which is what the new technology is. And some of the banks in even Asia have taken them on. One of the private banks has also taken them on. And the idea is that as we go forward, I think this is one of the pillars on which future ready agile cores will help banks move forward. So I think these are the four major things, as I said, right? The first one is design. Number two is personalization. Number three is microservices based backend and micro front ends, right, which help you move faster, and composable banking cores. I think these are the four pillars of digital that are important for us to move forward.
Thank you so much, Ravish, over there. And I'm going to, take this quote from your, discussion points. You can replicate tech, but personalization plays the differentiator. So that is one quote that I'm, taking away from this. But Ravish, you touched upon some very, very, important pillars over there. Okay, whether we talk about, design, whether we talk about personalization, whether we talk about, microservices, or whether we talk about a composable, banking stack, all these four pillars are extremely important. No two ways about it over there. And thank you for your view over there, Ravish. I'll keep on following you, in your professional journey and see, what all are the new things that you are doing. There are some very, very interesting things that I come to know that, you have been carrying out at IndusInd. So best of luck on your journey over there. Chirag, let me come to you, and let me understand. See, there have been enough and more technology innovations happening in the digital payments. So, what is your take on the entire activity in this space, and what all payment methods are you implementing from a scale point of view?
That's an interesting question, Raghav. So the evolution of digital payments has been very unprecedented over last 1 decade, especially since the advent of UPI rails. And a big thanks to NPCI. I'll not go more into this because everyone knows the UPI success story. But at the same time, there are some very interesting innovations which have happened globally as well as in India over the last couple of years. The latest craze these days is pay later products. Everyone wants to get on this bandwagon. Kalari in US has made really, really big impact there. And Simple and Lazy Pay in India are such players who started on this journey. And now after fintechs, banks are also realizing that for the lowest segment, their pie of credit cards might be eaten. So they are getting onto this. And not only from payments perspective, I think pay later is an interesting use case because it brings a new to it's the core TG is a new to credit customer and a very thin credit profile customer and who comes into the formal economy. So and besides this, new form factors are also emerging in pay later. So people are innovating to offer small credit lines on the UPI rails itself in a pay later format. And even players like Uni or Slice, they have changed the form factor of pay later to a card factor. So scale is already expanding on the payment side. There are many interesting use cases which are emerging. However, one payment that I'm extremely gung ho about, really looking forward to the use cases which emerge from it is tokenization. And with RBI's recent interest in this space, and especially on the security of our payment infrastructure, the RBI has now expanded the scope of tokenization from the device to now card on file also. So this space is actually primed for wearable and Internet of Things to become the mainstream modes of payment, especially in the retail domain. And this is going to happen within this decade. And I'm pretty sure the NFC payments via wearables such as smartwatches, such as your rings, your jewelries, even the voice-based payments on Alexa will drive the volumes, especially in the retail payments by the end of this decade. The payment is totally going to become truly invisible and seamless, what everyone wishes to, but has not been the case so far. But with tokenization, it should be feasible. Now, how do we still take it to the next level of the scale in terms of digital payment acceptance? So, while a lot of innovation happened on the payment side, the collection side, which is the core, which is the other side of the payment infra, which is the core where actually the payment can actually happen, has still the innovation has not happened at that pace in the collection cost side. So a lot of innovation is required, and with soft POS or app-based POS now taking a grip on the merchant acquiring space over the last couple of years, uh, this space is set to boom because from a merchant's perspective, it is no cost or almost a low cost solution, very competitive price, competitively priced by all the players. There are a lot of value added services which are built on the soft POS, from the smart business analytics to cash flow insights to even inventory management for some of the players. and it's much more user friendly. People are now used to apps rather than using the physical devices. So of course, makes it easier. And because of this, merchants have finally begun to see the true value in using a POS solution. The acceptance points for digital payments are going to skyrocket because of this within the next 4 or 5 years, and not more than that. And that's when we will really have a digital payment scale which is beyond our imagination as on today, because now the both the legs, the payment as well as the acceptance, are the penetration have reached to that stage where we can really shift the paradigms. Payments will become as an afterthought. No one would even think about doing a payment. It will be just like tap and pay from your watch, from your health check device, from your tracker. It is going to be something which you would not even think about. That's where the
Thank
scale
you.
is going to come from.
Thank you, Chirag, for that interesting insight. So, some follow-up points on that. You
Sure.
mentioned about tap and pay. So, do you think NFC is the way to go for the future?
Yes. So if you see most of the devices which are now being implemented at the POS, the NFC is becoming more and more predominant along with other ways of payment acceptance. And with but NFC is still not being utilized because people are not used to do this tap and pay. When I am handing over someone a card, he may very well swipe it. Why do only tap? But when because of this tokenization, this combination of NFC, when the payment is going to happen with say my smartwatch or with say my health tracker, which I'm wearing throughout the day, then it will be a thoughtless, it will be a seamless decision for me. I don't need to reach out to my wallet. I'll simply tap and I'll make the payment immediately.
Absolutely. So some interesting innovations over there, and I would like to add my 2 bits over there. So yes, Chirag, you mentioned about collections being one area where digitization or innovation is yet to reach to that level, and there is a lot of scope. So yes, I think, Chirag, that liability side franchisee has been the one where there has been a lot of digitization that has taken place, and asset side is something which has been playing catch up. Of course, there have been a lot of use cases on the retail lending side, digital lending side, consumer lending side, and as you were talking about buy now, pay later, a lot of use cases happening over there. On the merchant acquiring side, yes, UPI really changed the game over there. UPI really changed the game over there. Earlier I remember the days when we used to have those, POS devices where the merchant had to actually pay a rental every month, and then he had to pay, a MDR on top of that rental, and that MDR would also, differ with terms of the type of the type of category of cards. I remember one of those days, my daughter was young, and I took her to buy a bicycle, and I gave my credit card, and this guy tells me, "Saab, 2 taka lagega," and I'm looking at him, and I'm looking at him, and I just looked at him, and I paid. I argued with him, and he's like, "Saab, 2 taka lagega." So I can relate to all those things. And today with Bharat QR and UPI 2.0 and all those fancy, and yes, tokenization is going to be the game changer. So bang on, Chirag, very well said. Let me move on to Ravish. Let me move on to Ravish quickly. So Ravish, a quick question for you.
Yeah.
Some of the key innovative digital transformation that your organization has carried out to become the bank of the future. Can you dwell upon that, please?
Yeah. I think it's we are in the journey. I think it's important to note that it's a continuous, just like CI/CD. I think it's an important, just like CI/CD cycles that you and I will be implementing in the bank. I think it's a continuous journey for us. But a few places that what we are doing, at least within my sphere, because there are more than at least beyond me as well. But what we are focusing on is specifically digital first segment only propositions. Right now, we obviously understand that the customer needs are slightly different. So while it might be, let's say, one app at the back end, but the idea is that from a proposition perspective, we are going forward and marketing it to different segments in different manner, because not every segment is going to relate to the proposition. So basically, for a proposition for a retail, let's say a 25 to 35-year-old is going to be very different to a proposition that we are going to market for a 35 to 45-year-old, right? Now, again, to deliver this, the idea is that we need to have personalization even on the journey side at the core. So I think that's one of the important future innovations, if I have to call that, because that's what we are trying to do. So for segment specific proposition is what we are actually on the path towards right now. What we are, and as I said, right, somewhere one of the things that I described earlier, one of the 4 points, personalization is going to be continuously something that we are going to working on. I think it's a very complex topic because you need to actually architect your data in a very different manner. You need to deliver your data in a very different manner, and you need to continuously, the loop has to the from the customer, the feedback has to flow back to the data, which will need to continuously evolve. So it's a very it's not so easy as just a word that I described. It's actually back end of it is fairly complex. But that's the start that we have done. But these are three important parts to personalization. As I said, data. How does it need to be architected? How do you need to even project options, deliver it to the customers? Whether you are changing the app itself, you're changing the options itself, or whether you are delivering it through a form factor, which can be a banner, or it can be a new HTMLization that you are able to deliver it in a space that you have delivered for personalized, let's say messages, or it is a pop-up. So how do you want to deliver it, right? Because at the end of the day, you want to provide a seamless journey. You don't want additional, hurdles for the customer, but you do want to interact, right? Because at the end of the day, what are you as an app, right? If you need to find your relevance in the world right now, you need to compete with the likes of Netflix and the Amazons of the world on the OTT, etc. You need to find yourself and make yourself that relevant. So how do you ensure that you engage with the customer on a daily basis and make yourself relevant on a daily basis? And similarly, on the specific side, even in fintech, you have to compete with one product organizations which are doing that really well, right? And those one product organizations are actually expanding. So the idea is that how do you do that? So keeping segment specific propositions, marketing it out there with personalization at the core. And the number three thing that we are doing and we are trying to build is actually even redundancy, right? Because uh, it's important to understand different exception scenarios. It's important to understand switchover mechanisms. Some of the things which banks took time to innovate, but the Zomatos of the world, etc., were always out there, right? Which is, let's say, a payment mechanism scaling on one particular app. One particular bank, you switch over to the other one, right? So how do you create these redundancies across the customer journeys, right? I think that becomes important. And then finally, doing a bunch of things like even putting out your assets out there, running a proper running it through proper regression analysis, CXC testing, usability testing, ensuring the asset that you put out there is not actually see, it will continuously learn, but you need to put out a 85 to 90% sort of an asset out there rather than a 65 to 70% ready sort of an asset, right? So you need to do a bunch of new things, ensure you develop the CI/CD framework to to ensure that you are able to deliver every day. Maybe the ability should be there every day build, but the idea is that at least that weekly we should be able to get out there, learn from the customers inputs, and then again innovate in a week's time, right? I think that's what we are moving towards, but yeah, that's where we are.
Fantastic, Ravish. Thanks a lot. Thanks a lot for that. And you are spot on when you say that, personalization is the key, and, data architecture, and, those things are the important aspects, because how you interact with your customer, how the customer interacts with you, what kind of redundancies you build in are extremely critical. And,
Yeah.
I can relate to you because we were doing this, we're launching this neobank, and, we had provisioned for certain number of API hits in a day. And, the first threshold itself was breached in the first 3 days. After that, we tripled it, and then the threshold got breached in 7 days. We made it 5 times, and the threshold got breached in 2 months.
Again.
So I can exactly understand what you're talking about. Thank you so much, Ravish.
Thank you.
so much.
I'll need to step out. Apologies, but thank you for the engaging
Sure,
discussion.
Ravish. Thank you. Thank you for your company today.
Thank you.
Let me also, welcome Nilesh Sangoi. Nilesh joins us into this panel. So welcome, Nilesh. And Nilesh is the CIO of Fincare Small Finance Bank. So Nilesh, let me move to you quickly now that you have joined us, and then I will move to Prasanna post Nilesh. So Nilesh, today transforming CS through banking technology payment systems is the new norm because product managers are focusing on simple user-friendly solutions. You heard Ravish when he was talking about personalization, rendering, and so on. So can you give us an example of an innovation or solution that you have rolled out keeping CX in mind and why? Nilesh, over to you.
Thanks, Vibha. Sorry, I got a little exigency at my end, so there was delay in joining. And thanks for this opportunity. I'll straight away jump to the example when we have so many loan products where customer have to pay, and there are various mechanisms for making the payments. Customer obviously cash is always one option, but then customer can do online fund transfer the way they do. They can use NEFT RTGS to transfer fund to loan account, or we have BBPS which has come in now where customers can make payment. We just launched one simple payment mechanism through WhatsApp, where we could make out a push notification to a customer in WhatsApp through our authorized WhatsApp handle. And that card would be simple card, which will talk about the loan account number, the amount which is due to customer, and there'll be a just pay now button. It's a customized button. So the moment customer clicks on that pay now button in WhatsApp, it will open up the UPI apps which are installed on that customer's phone, and customer can choose any UPI PSP app that is comfortable with, and just entering the PIN inside that UPI app. Doesn't have to enter the amount, loan ID, anything, and within 30 seconds the payment is done end to end. I mean, while this is technically very simple solution, what we try and see is that many customers are today moving to WhatsApp. I mean, almost everybody is on WhatsApp with a smartphone, and UPI is becoming equally universal in terms of the payment mode, ease of use. So combining these two, WhatsApp and the UPI, both with the UPI being so open where you can use any of the UPI, any bank accounts and make a payment. So this has a great potential. Obviously, this needs to be promoted well to customers. We have to regularly send out those notifications to customers, but customers can also, so push and pull, both are possible. So customers say, I want to pay on our WhatsApp number. If they say, I want to pay my loan account, then also the customer will get a same option where customer can make a payout. So this is one example which comes to my mind immediately.
Sure, Nilesh, and I can relate to this because I had recently launched WhatsApp banking at our SFB as well, and then we put the BBPS biller for collections of loan repayments. So yes, and the type of segments specifically that banks like Fincare and Equitas we cater to, it sometimes become a tad bit challenging to improvise digital over there, because at the end of the day, adoption of digital at that last mile is sometimes challenge. And like I can name a certain percentage of your and my customers who may not even be on smartphones today. They may even be feature phone customers, and we have those last mile teams who go knock the door and service this customer. So yes, so very nice, Nilesh, very good rendition of technology over there. So congrats to you and Fincare on that. Moving on to Prasanna. Prasanna, now, with Prasanna, it's always, future tech. When Prasanna comes to mind, it is always future. So I'm going to ask Prasanna a very future-centric question. Okay. So Prasanna, what do you think, from a future of banking perspective, would be an ideal digital business model? Let us hear about your take on the, future of banking riding on digital.
I think there are quite a lot of aspects around the future of banking. And if we compare other industry, right? How customers already moved on to the some other industries like retail industry or media and entertainment industry. Similar kind of experience they will look at, that cross industry innovation has to come into banking side. If you look at on the channel side, future of banking will be on marketplace, right? On the maybe customer will not come to this monolithic mobile banking app or internet banking app. I will say that in next 5 years, internet banking will die, right? What is that? We will see that API banking or open banking, on top of which these APIs are open to some of those big fintechs or big tech companies, like we see in PhonePe, Google Pay. We'll see rise of a lot of super apps. Will be a non-banking super app providing banking plus non-banking kind of application for lending, for say decentralized finance apps. If in India there is good regulation around the cryptos and tokenization, we'll see some banks certainly will launch some of those decentralized apps or some features within their mobile apps or these things, right? So looking at this overall thing on the middleware or on the operation side, we'll see a lot of operations. I think if we adopt in future blockchain kind of a technology, it will do with lot of regulation or lot of operations, say called reconciliation or settlement or any of those additional things which we do with the help of operations, right? For KYC, there is a lot of operations, maker, checker, followed by supervisor, and so many other things. If we adopt right technologies these days, I think we will see a lot of areas will be wiped out in the banking. Fraud risk management or some of those disconnected experience in a central fraud registries, we can do away with a better AI and a blockchain side. And in the backend, I think while banks are adopting AI and big data engines, the more banking will be rather than become unidirectional, it will become bidirectional. What does it mean? Say, suppose Prasanna is doing transaction on any of the apps, maybe fintech app or marketplace or even on the bank's mobile app. He will get to know what is that he should do. Like some kind of advisory will be provided to him based upon his past transactions, based upon his past data there and there itself. So rise of bidirectional banking will be soon with the future of banking. And what we have seen in the past, right, the way technology comes. Say example, we have seen that brick and mortar model, right? So internet came in and come up with the internet banking, mobile banking, UPIs, and so on. A lot of consolidation will keep on happening in form of UPIs and account aggregator. At the same time, on the customer experience side, it will become more and more invisible banking. Security, they will not bother about what is in my security, what is in my OTP and password. So I think I will not be surprised some of the banking, some of the innovative banks or innovative startups help to create a passwordless banking, and which will understand the biometric or digital identity of any of the customers in future. I think smartphones has played a major role in the last last 10 years after Android and iPhone, right? Which wherein we have seen those days very few banks were on mobile banking. Now everybody is on mobile banking. Tomorrow we will see few banks on augmented reality, and maybe at the end of 2030 it will be invisible banking with less of interfaces, less of form factor of a banking will change. Wherever I am there, automatically based upon my behavioral biometrics or my biometrics, transactions will happen on the shopping mall or in your smart cars and your cars and so on. But I think while we talk about a lot of a future, I think your current banking is very, very important, right? So we have to really, so current banking, current architecture, which is like Ravish was talking about, moving on monolithic architecture to the microservices architecture for a future, or and he was talking about a customer experience, how customer experience is going to change. So if you really drill down a futuristic digital bank, it will have a zero operations. Say example, Atom Bank, no operations, and it is all sitting on a digital channels, right? I think I will see branches will transform into cross-selling entities, cross-selling real estate, whatever we have built, right? So I think we will see small branches or pop-up branches in future. They appear for some time, they move it to some other location based upon, those will be a lot of 3D printed bank branches which can be printed immediately or can be recycled immediately. So that's a futuristic branch we will see. Channels, I am seeing, as I rightly said, internet banking will be slowly diminished in the next few years, while we'll build better corporate banking experience onto mobile apps. So I think eventually both set of customers will have a better mobile experience. It could be on mobile banking device or mobile device, or maybe on virtual reality kind of environment in the future. We'll see. Next, in the back end, as I had said, with the adoption of a better blockchain, maybe tomorrow's paper-based currency transform into central bank digital currency, we'll see a lot of new products. Although we deal with the savings, current, fixed deposits, some kind of mutual funds, with the crypto and with the CBDC under better regulation, we'll see different kind of products, microfinance or micro insurance or micro investment kind of or interoperable banking kind of a product. Certainly we'll see in the coming future. And I think a lot of work is happening on the RBI side, but it will take its own time because it has to be validated, regulated furthermore. Tomorrow's banking gonna be invisible banking, marketplace banking, and any customer can bank with anybody a moment, right? He can move money left, right. So bank will remain as a government body or a institutional which is regulated by the entities, but most of the customer experience will be on to the third-party devices, IoTs, or third-party experiences, which is like fintech companies or third-party marketplaces and so on. So I think that's how we are seeing in the retail and media entertainment industry, right? So it was a cinema hall, right? We used to go there and sit there and watch cinema. Slowly it came out. Now customer, in the sense, whoever wants to see any movie on Netflix or Amazon Prime, maybe it could be done by any media house, but those rights are given to those media houses. So slowly that cross-industry innovation is coming and will be adopted furthermore. When 5G will become a reality technology in the next 3 to 4, at least in India, we'll see different business models. So I think we'll see who will be the first bank to do those, and so that other banks also or regulations to follow that whole, as Chirag was talking about, wearable banking, right? Or NFC kind of technologies in cars or homes. Your car and home become customers will have their own digital identity with the consent of their owners or their customers. I think it's gonna be beautiful in the 2030, but I think always look at how we are driving our current banking. That's also very important. But in a nutshell, the regulations which we have built on current centralized architecture, those regulations will vanish slowly as we'll move on to the decentralized architecture. Rather vanish, it will become very easy because decentralized technology gives more security, more imperatives around data tampering, right, or non-tampering. Edge computing will become a very important aspect. While we are in the era of cloud computing. Edge computing gonna be the very important. How we really see the image of a customer in the branches. How we calculate immediately there his sentiment, his facial, and provide needed experience. There is a lot to talk, but I think in a reality, it really takes a lot of time, right? Even in the current generation with the existing web spheres, databases, it takes a lot of, like UPI to 3 to 4 years, right? To build from specification to the actual adoption. It will take time, but the pace of adoption is very huge, Vaibhav. So let's look forward how banks will collaborate furthermore to make next level banking together.
So Prasanna, yes, banks and fintechs have been coming together, and they have been, laying down the fabric for the, new age distributed architecture and so on. But at the same time, it is important to acknowledge what the regulator has been doing, because the regulator has been matching steps with the industry. And I recently launched a couple of industry first initiatives, like booking a FD on a TPP without a bank account, without a bank account in that bank. But then the regulator has been very supportive on a lot of these fronts, because the regulator understands that yes, distributed architecture is the way forward, and banks also somewhere, Prasanna, have to wake up to the fact that fintechs are extremely agile and nimble-footed, and banks have to adapt to that. Chirag, let me come to you. And
I would like to just add what Prasanna said. So while banking is going to become a totally background activity and with very little or no mind space for the end users, for masses, it is going to be driven by an interplay of artificial intelligence, quantum computing, Internet of Things. Internet of Things is something. So and blockchain. Most of the times, when everyone is looking to these technologies and their application in banking, we have a tendency to look from a single lens. But the way the interplay of these technologies are going to change the overall business models, the user experience. That is something which we cannot even imagine today. Uh, each tech is so powerful, and with the quantum computing and edge computing supporting the back ops, the background processes, the level of neural networks which are required to do this is going to make banking as a thing of past as we know it today.
So Chirag, a quick follow-up question to you. Well said, and answer in another 2 to 3 minutes, not more than that. So digital bank, challenger bank, neo bank is the new mantra. Okay, what is your organization's plan towards that? Any particular name in this space that excites you and why?
Yeah. So you mentioned a very interesting word, challenger bank. So let me take a step back and how a customer comes. A customer never looks for a product. He never looks for a bank. A customer looks for a solution. So one of my favorite authors, Clayton M. Christensen from Harvard, he says that a customer is always having a pressing need in his life for which they want a solution, and you present that solution, and the customer will come to you. So that's the kind of need gap which has been met by the neobank. The innovation frenzy which neobanks has brought to the financial ecosystem is sometimes mind-boggling. They are really building smart solutions to solve these pesky problems which have been there for decades, and um, now neobanks, especially in the MSME space, are solving them for those very non-tech savvy users building those intuitive solutions. So considering them as a challenger or as a competition would be a loss of opportunity for the whole ecosystem. And hence, most large banks have realized that and are focused on building deep partnerships and value-driven integration. The focus is on how can we synergize in such a way that the banks are able to provide the distribution, the scale, and neobanks provide that customer delight, making the financial decision for the end user very simple and efficient. Now, you asked that which are the players which really excite me. So I am very passionate about MSME space, and really impressed by the work done by Open in this space. Open is a neobank, which is one of the very first neobanks who started in India around 3 years back. Um, One of the lovely things which they are doing is with the API integrations with banks on one side, with accounting solutions or innovative solutions such as Tally on the other, they have really automated the reconciliation, bookkeeping, cash flow management for small business. You ask any small business what takes their time which is away from business, and it is not even banking, it is managing these books, managing their cash flow that really troubles them. And to further sweeten the pie, Open has even enabled with smart partnerships the small businesses to tap into instant commercial credit cards, small ticket lending offers with very short time period, like 15 days, even up to 90 days, with minimal or no paperwork. Now, that's where you are really solving the problem of the core kirana guy or a very small business owner who is running a small factory shop, and providing what is his customer customized requirement. So I'm really excited by what is happening in the neobanks and how we as a larger banks are able to partner with them to provide that kind of delightful experience.
Thank you, Chirag. And yes, we have also had a tremendous experience working with Open. Last year, we partnered with them and launched our neo bank on the merchant side with them. So, last question to Nilesh, and then we will close the panel. So, Nilesh, again, future of banking. Let us hear your take on the future of banking riding on digital.
As the saying goes, never make predictions, especially when it is about future. Because whatever we do, I think future is going to be ahead of us. And I think Prasanna has really covered the entire landscape very well in terms of what all is possible, invisible banking, embedded banking. Banking is like, the back office, the back end of the entire engine, and front end is at, every touch point that you have. So I think that's how it may pan out. Today, it looks like the way, various forces coming together, various technologies, the new age players, so many things coming together. I think all the disruptions that have happened, if you look at in last couple of decades, uh, like mobile, I mean the cameras, we started having better and better cameras, the more resolution, the digital SLRs and higher resolution and lots of feature. And ultimately the industry that disrupted the cameras was very cheap mobile phones. So I think that's how the banking today is in that probably sphere where we are trying to make better and better banking and building more features and lots of things we are adding into banking. Probably it could be outside the industry that where it comes from, and some indications are already there. The way we see UPI, the entire payment space being taken up by players outside the industries, like the Googles or Walmarts or like the such players of Amazons, etc., are today carrying a large pie of those payment space. Or if you look at even the bill payments, I was looking at last month's data. PhonePe has got 49% share of BBPS, and I think with account aggregator opening up, I think it's going to be same inflection point what happened 4 years back on payments. Now the information that is there with the banks, and the what we could as a bank we could make out of those information about customers payment, customers entire transactions, about his savings accounts or current account, that's going to be now available publicly. So it's going to catalyze a lot of innovation. Lots of small player will have disproportionate capability now to build business models on that. So these are each one of these steps which is coming up. The way UPI became a completely open payment system ecosystem. Similarly, the account aggregator would make the savings account or a current account completely open, and then you have plenty of these APIs coming on GST and your income tax returns, all of those things coming together. The whole lending landscape is going to undergo humongous change. I think the traditional ways of going through credit bureaus and looking at some KYC, etc., that's going to fundamentally change. It's going to be the decision making is going to be, if not in seconds, will be in minutes or maybe in few hours, but not days. I think that entire cycle of underwriting and soft approval, hard approval, everything is going to be much faster. So speed will be absolutely high. Lots of funding will come in. Lots of innovation will happen, and I think banks definitely will have a role to play. Some will have a front side view, and somebody will create a strong backbones, like the way UPI is running on the backbones created by banks. So obviously, everybody will have a role to play, and it's going to be very interesting play.
Thanks, Nilesh. And with this, we have, I think we will close the panel over here. And yes, everyone, the future of banking, future of digital payments, steering towards a cashless country, economy, India is definitely on the right path. There have been a lot of path-making innovations that have taken place in the banking space, right from, we talk about digitizing the channels, omni-channel experience, to digitalizing the branches, to digitalizing the liabilities business, to asset business, to payment business, to advent of, things like UPI 2.0, where, there are millions and millions of transactions riding on lakhs of crores of, worth of amount happening every month, to neo-banking, to RPA, to bot banking, to WhatsApp banking, to augmented reality, to design labs, to microservices architecture, so on and so forth. The future is amazing. The future is definitely amazing. Thank you, Prasanna. Thank you, Nilesh. Thank you, Chirag. Thank you, Ravish. Thank you all for joining. You all have a pleasant day ahead.
Thank you, Vaibhav. You too. And it was excellent moderation.
Thank you all.
So Vaibhav, we have hello.
Yes, Namrata.
Vaibhav, we have some audience questions as well. So first question from Suraj, he's asking, do digital banks generate more satisfied customers than banks with extensive branch networks?
Can you repeat the question, Namrata?
Yeah,
And do
yeah,
you want
sure,
to ask it?
sure.
Is it asked to a specific panelist?
No. It is open for everyone.
Please
So
repeat the
the
question.
question from Suraj, he's asking, do digital banks generate more satisfied customers than banks with extensive branch networks?
So if everyone is okay, I would like to take the question. So, Suraj, thank you for that question. Digital banks, in terms of experience, definitely provide a superior experience, definitely provide a much more easier experience to the customer, and the customer is satisfied at the end of the day because everything happens at the click of a button in the comfort of his house, in the comfort of the mobile, which is in his palm. At the same time, it depends on what kind of a customer it is, because if you are talking about a millennial, a Gen Z, or a youth, then yes, this is the way who would prefer to bank. It's like you ordering something on a Swiggy or a Zomato, and if you have a query, then you would want to directly select your order number, put the query, and you get a response within 30-50 seconds, and your query is resolved. But at the same time, if you are a 50 plus 45 plus age customer, and you are used to going to a branch, or you're used to, now let me also talk about internet banking. You are used to internet banking and stuff, then then it's a different experience altogether, because you would want to go to a branch for certain reason. You would have a passbook, you would want to update your passbook. For example, my parents today, they are used to updating their passbook, and they are both ex-bankers, but they don't get the comfort till the time they see that entry on the passbook. I keep on telling them that just download your YONO and everything is over there. They are SBI customers. They use that, but at the same time, passbook zaruri hai. So if that answers your question, Suraj, if any other panelists want to add, please feel free.
So just a couple of points, Vaibhav, you very well covered it. So Suraj, most of the digital banks or the neo banks are currently one product. They started as a one product. And that's why when you are building only for one product with a key TG in mind, it's easier to build a delightful UX solution. Whereas the traditional banks, they are providing the whole universe of the banking services, and then providing it through multiple branches, it's also very difficult to keep a uniform experience. Whereas through a digital only channel, you are able to always provide the same level of experience. So that's the challenge. But now large banks have also realized this, and they have pulled up their socks. You would be seeing in next couple of years the kind of innovation, the kind of user experience which is going to be coming from the behemoths of the Indian banking industry.
Okay. The second question from Pratik, he's asking, is digital banking a way to improve banking services?
Okay, so let me again take this question. If anybody else wants to volunteer, please proceed. So, Pratik, yes, digital banking is a way of improving the banking services. So earlier, we had a brick and mortar setup where there used to be, bank branches, and then there used to be older technologies. As we move towards, more inclusive technology, the branch setup, physical ledgers moved on to TBA, total branch automation. Then it moved on to CBS. On the other side, the closed loop cards moved on to interoperable cards. Then we had ATMs, checkbooks. Then we had check truncating systems. So similarly, yes, digital banking. One way of looking at digital banking is digital transformation part of it, which is essentially improving that entire user experience, whether it's a customer-facing product or it's an internal process. The role of digital transformation under digital banking is digitizing that entire end-to-end customer process. On the second leg of digital banking is also digital products, and these digital banking products can be, a parallel competitor product to what the physical products are. Okay, so most of your NPCI products that you see, they are all digital payment products. They fall into digital banking. At the same time, when we talk about activities like a digital SA, digital CASA, digital FDTD, those are digital banking products. We talk about digital lending, those are digital products. Buy now, pay later, those are digital products, and so on. Anyone else wants to add, please?
The next question from Rajendra, he's asking, does the value creation of digital banks increase by offering more personalized propositions while looking to the next generation of banking customers?
Can you please repeat the question?
Yeah. He's asking, does the value creation of digital banks increase by offering more personalized propositions while looking to the next generation of banking customers?
So, yes, that's a very good point you raised. So the personalization is already happening within the banking space, and not only banking, even in the fintech players. If you see, there are players like Kuvera, even Zerodha or GrowUp, which are providing very customized financial experience in terms of investments. And then if you look at players like Lending Card, which are providing more customized experience to the lending requirements of a MSME. So because of the digital, you are able to provide a more relevant experience to the person who has come for a particular solution to you. You know the background data. This is couple of questions itself. You can put the customer into a particular demographic category. And now with the advent of NLP chatbots, you can ask in a very conversational manner few questions, and then provide the answers which customer is looking for. This is his core requirement. So this interplay of technologies is able to provide a more customized, more personalized experience to the users, and it is going to only increase because the backend tech stacks, the microservices and the API orchestrations are also improving by leaps and bounds. And within a couple of years, most players, be it fintechs or the large banks, would have personal digital experience for the customers.
Just add with an example, like, we used to all watch TVs 15 years back, and every time we had to scroll through channels. Unlike if you watch YouTube today, YouTube has constantly building the history of what you watched and will show you, relevant content that you watch more often. Same, similar looking content, etc. Or people who have watched this also have watched that. All of that is possible without asking you any questions about what you like, what you don't like. And that's the power that digital can bring in with the personalization.
Okay, so Vaibhav, we are done with the questions. We have more questions from audience, but we are running out of time. So
thank you. Let's wind up the panel then. Thank you, everyone.
Before ending up the panel, I request all the panelists to smile so that we can take a smiling screenshot. Thank you. Thank you all the leaders for adding value to this forum with your insightful discussion. Moving further, we have another panel for the day, and the topic is Next Generation Banking, Reshaping Processes by Embracing Technologies. Today, 150 plus CXOs and 50 plus attendees are watching this live on our website. Here I call the moderator, Mr. Deepak Raju from RBL Bank, Mohan Kumar Venkatesan from Axis Bank, Subramanian Srinivasan from Deutsche Bank, Dheeraj Jaggi from NatWest Group, Satya Shankar Mahapatra from Barclays Bank, and Prashant Jaiswal from Punjab and Sindh Bank. I request Mr. Deepak to start the conversation.
Sorry, Deepak, we're not able to hear you.
Okay, hi.
Yeah,
Can you hear me?
Yeah, yes, we can hear you absolutely fine, Deepak.
Yeah, thanks, Namrita. Thanks for the handoffs. I just want to do a quick check on who the panelists, the panelists that have joined on the call. I can see Dheeraj, I can see Subbu and Satya. Satya, if I can request your video to be on, please.
Yeah, Prashant Jaiswal and Mohan Kumar will be joining soon.
Okay.
Till then, you can start your conversation.
Okay, very good. So, thank you to the panelists for joining the event today. Thank you to the audience who've logged in from across the places from wherever they are remotely. Firstly, I hope all of you are safe. Your family members are safe. I know today is particularly a busy day for conferences. As I can count at least 3 events that are concurrently happening, including the Global FinTech Fest. And I'm sure most of us have been sort of in and out of those tracks as we speak. And specifically after Prasanna's session is always difficult to moderate because his energy is affable, and he obviously brings in he and Vaibhav, they bring in a lot of phenomenal perspectives on emerging technologies and things like blockchain, future of banking. So it's a lot of and I don't know how many of you were tuned into the previous panel, but there's a lot of articulation on what the future holds, and whether people want to predict and not want to predict, and things like that. Today's panel is going to examine the topic called Next Generation Banking, Reshaping Processes by Embracing Technologies. And I want to thank Namrita. She's put together a very handpicked cohort, fantastic cohort, very experienced people, stalwarts in their own areas, and people who've been there, done that. So we're going to deliberate on this. We're going to exchange some views on how they think embracing technologies is going to shape up banking and financial services in specific. And of course we're going to open up the panel to share their experience. I want to quickly move and just make sure that we do get some formal introductions from the panel, starting with Dheeraj. Maybe like a 1 minute introduction, and then we can go around and I can set some context and get the conference going.
Absolutely, Deepak. Thank you, Deepak. Thanks for the welcoming note. So I'm Dheeraj Jalli. I am leading the API space within the NatWest Banking Technologies. So I am responsible for kind of exporting API outside of the NatWest group. So I'm looking after the India Technology Department at this point of time. I have been associated with NatWest approximately 14 years. And prior to NatWest, I have been associated with Microsoft. So I would like to welcome you all on this pretty wonderful session, and hope we are able to basically get some understanding how the banking future look like. All right, over to you, Deepak.
Welcome to the panel, Dheeraj. Subbu, you want to go next?
Subbu, you're on mute if you're speaking.
Yeah, you might have to unmute yourself.
Hope all of you can hear me now.
Yeah, loud and clear.
Okay, so again, Subbu here. I'm with Deutsche Bank. I've been here for the last 6 years. I lead the big data and analytics platforms in Deutsche Bank. So what we've done out here in Deutsche Bank is we've tried to look at data, big data and analytics as a whole. And instead of every business area doing something in that in terms of infrastructure or a framework, we've tried to assemble it in one place. So as part of my role, I take care of the big data Hadoop stack in the bank. We got around 2,000 odd servers. So how to get the upgrades done, how to offer the latest features. And as we know, the next gen is on this space is all about the cloud. So we are embarking on a cloud journey, and we are trying to form a framework on the cloud, for the big data space. So I'm leading that bit. Plus, we also have the analytics space, because big data, generally when we speak, it's not complete without the usage of analytics. So we have all of the BI platforms like Tableau and business objects, data science tools. So all of these we are trying to put together in one place, and I lead the engineering for this space. And nice to be here with all of you.
Very nice. Welcome, Subbu.
Thanks.
Satya, you want to go next?
Hi everyone. So I'm Satya Mahapatra. So I lead risk and analytic projects in Barclays. So mostly regulatory projects, and also work with Barclays Rise. So Barclays Rise is an incubation center for a lot of startups. So where we work with the startups and see if some of the solutions can be used in the bank. We do POCs with them, especially like in the credit underwriting space, or using NLP for predicting models, the default models. So that's also kind of thing. And also I have a passionate for green investments. So I have been funded by Barclays Social Innovation Fund for developing green products for the APAC market.
Fantastic. I've worked with you guys before in my past lives. RISE is a fantastic initiative. I know that brought the ecosystem together, the fintech ecosystem together back in the day. So I welcome you to the panel, Satya. Okay, so before we go into the questions, I thought it's a good idea to just get some context going. In terms of how I see edge technologies and new emerging technologies that are being adopted. Firstly, when I sort of analyzed why financial service providers are in top gear today, post the pandemic era, I think if there are two industries that have really taken to digital, one has been healthcare and two has been financial services, where the adoption of digital technologies have been quite dramatic. The first trend that I saw was the increased availability of open source technologies, both on the supply side as well as on the demand side, the consumption side, where new technologies are easy to create, to create demand, to take it to consumers, to create awareness, and to be able to adapt. And like I said, banking world in specific have had 6x 7x kind of digital adoption in the last year or so. The second thing that I saw was drastically new ways, new approaches where customer pain points were being solved, and very nifty little businesses that have come out, be it in the startup space or be it in different siloed initiatives of banking and financial services players, which have significant top line impact. And many banks have been able to do this by just partnering with fintechs, big techs, launching new innovative product offerings to their customers. We saw Kotak before the pandemic hit us. We saw Kotak's uptake of 911. SBI put in a lot of muscle into RBL has their version of Abacus, which is we're trying to position that as a neo banking offering to our customers. In the payment space, we've seen the big tech players who've managed to get payment licenses, be it Google Pay, Paytm. We had Razorpay, which catapulted a lot of businesses in the SME segment. In the wealth management space, we saw Zerodha run away with a lot of market share. Insurance, we saw the launch of GoDigit that was launched, and they came up with 100% online offerings and fairly innovative products. And today they are entering into the offline space. We saw Toffee, which came up with sachet type of insurance products. In the lending space, we saw Paisa Bazaar, Loan Tap, Early Salary. These kind of fintech players make early inroads. We saw Faircent, which was a startup that was actually formed much before the actual P2P lending regulations came into effect. And then we have players like Lendbox and that side on, and those kind of players on one side. On the other side, we have the large companies which are also vying to position themselves in neobanking. We have players like Amazon and Byju's and Flipkart and Ola Money. We're all really licking their paws, and because of the kind of mind share that they have of the customers, it's easy for them to mold themselves from traditional players with very focused problems into neobanking providers. And the other thing that I saw was proven business models that enhance productivity, enhanced efficiencies, sort of saw big impact on bottom line. And we saw recently we saw like a stellar listing of Freshdesk on Nasdaq. We saw Zoho, which has always been a company that's been like my favorite that I track. They were one of the pioneers in the SaaS product platform with great focus on profitability. So net, this has been like a very hot market with significant tailwinds on innovation and digital mindshare. that's the way that I saw things. When we look at the government and specifically NPCI and some of the payment products that NPCI has dished out in the last 5-7 years to be specific, and they are one of the biggest innovators in the country. They brought in the payment rails, put down the Beam app, got the API engine going. They're launching the account aggregation framework, which will sort of just aggregate 19 different financial assets, bank accounts, credit cards, equities, bonds, mutual funds, insurance policies, which was a bit of a surprise to the bouquet. And their transaction volumes have actually increased. If I look at data, last 7-8 quarters, they've grown about 4x. We see about I think they were $40 billion in aggregate transactions before pandemic. Today they are at about 180-200 billion dollars worth of transactions. If you look at Far East, Singapore, has done a lot of work. We look at MAS as really a very flagship regulator. They published the Open API standards. They launched the APIX about 2 years ago when our when our Prime Minister Shri Narendra Modi was there. They inaugurated. I think the initial cohort was a bunch of about 100 fintech companies, including some regtech companies, and some of their offerings were pretty fantastic. Then we had the Bank Negara in Malaysia, and they came up with the interoperable credit transfer framework, somewhat similar in lines of what we see in Europe and Hong Kong, which came up with the open banking platform. So a lot of stuff that's happening in the ecosystem, significant government support, heavy innovations that are coming in where people are putting the rails in place for banks, fintechs, partners, big tech companies and so forth to come together to collaborate and create very interesting, very disruptive sort of technologies. And that's the context that I've seen in the last 2-3 years, just to give everybody in the audience a bit of a flavor on how the market is evolving. My first question to the panelists, and I'll just maybe we spend a minute or two with each panelist, trying to understand from a customer perspective how each of these digital disruptive technologies have actually improved the lives of customers. How do you guys see it from your own experience, as users of retail banking, from your experience of having worked in large banking entities? How do you see these emerging technologies, and their usefulness to customers? I want to maybe start with Dheeraj, if that's okay.
Yeah, absolutely right. Yes, definitely. See, the customer is a king. I would say, if you're not basically thinking on that breaker lines, that we have to improve customer experience, we will not come with the disruptive technologies. All right. So I would say, yes, there are technologies that are kind of collaboratively working together with each other. They are not previously what we used to happen, the technology used to work in one particular bundle itself, and nothing has to do with what is happening with the bank. Now, technology are coming and working together as a glue with each other in order to bring that breaker culture of increasing the customer experience, of enriching the whole kind of usability of the whole technology. Now, if I talk about technologies in your hand right now, you kind of think about it that you open up every day in the morning and you open up your favorite app every day in the morning. Under break of favorite app, if you whatever you see, that you will basically get your account details, or you get your balance details, or you get your transaction details. That will be basically the experience that we're talking about to the customers. So banking should not be something that a customer now needs to go to the bank branch in order to get the passbook updated and get to know, okay, what are the transactions the customer has done. Banking should be on the hands of the customer, and that too not dependent upon the app, that too dependent upon the customer favorite app. That this is my favorite app. I want everything on this particular app itself. That's how basically the disruptive technology that we're thinking of. And going forward in future, you will never know. You will have particularly the voice-based thing telling your parents every day in the morning.
Fair enough. Do you agree with that view? Customer is king. Put banking right in the hands of customers. Subbu?
I think, yeah, customer is king, and a lot of companies are going by that mantra, and it has definitely helped customers in a lot of ways. So earlier there was a one size fits all approach that all companies used to follow, and that was not a very something that was wantedly done. Just that there was no analytics backing your decisions. Now we have a lot of analytics. We have a lot of advancements in technology. So the personalization that people wanted, it is there. But just to also throw a bit of caution to the winds, yeah, customer is supposed to be perceived as the king, but also what we have to know is that all of these companies, all of these smart companies are creating a persona of you. They know what Deepak looks like, what Dheeraj looks like, what he's supposed to do next. So they have you in a box. You've seen the I think documentary, The Social Dilemma. So they know what exactly you're going to do. So every bit of personalization also has a bit of intrusion of privacy element in that. Of course, it's always up to us to draw the line, right? We can say, yeah, it is helping me because it is monitoring my heartbeat, and it knows when I'm not feeling well, and it will alert me. That's a good thing. And there are some things which you say, no, no, it is actually trying to watch my spend, and it is throwing a message, okay, buy this toy when I'm at the mall, right? So there is always a bit of a caution that we need to throw to the wind. But at a broad level, at least in the last couple of years, in this COVID pandemic, we can see the whole manifestation of technology, really coming out, because so far it was all in a all stuffed inside a genie's bottle. But when we wanted it, it has helped us, right from the payment of claims to KYCs done remotely, and all of the remote ordering apps. We haven't had to step out of our homes that much. So things have helped us, but we just need to have the caution element, which we should not forget.
Perfect. Absolutely. What about you, Satya? You're the risk guy on the panel. How do you see this? Subbu talked about, customer is king. Yes, no doubt, but still you need to draw the line. Manifestation of technology, is something that's massive that we start seeing in the last 6-8 months specifically. What are your thoughts, Satya?
Sure. So like as a bank, we are facing like different segmentation of customers demographics. So we have to cater to the young digital savvy customers and also the aging customers, the elderly population. So like as what Dheeraj said, so currently like we are having like one banking app, which can cater to the multiple customers. But definitely for the other demographics also, we need to have proper channels or quite ease of use of the applications where they're able to do their transactions. So technology should be personalized based on the user preferences or the users personas. So that's one thing we have to take care. Second is it's ease versus security. So like when a debit card, credit card transaction does, it should be fast enough. But of course, in between, we have to do some thousands of checks which needs to be done. And it's a trade-off versus speed versus security, because we have to ensure that not a lot of frauds happen. But even if it happens, you can't totally eliminate that. But of course, the new pattern recognition technology based on the personas without taking too much privacy. How is the customer, whether he's a left-hander or a right-hander? How does he does his transactions? What time does he does? What is his location? So all those kind of things also helps in creating a personalized kind of a security for the customer. But of course, we have to take care of the privacy also of the GPDR rules and the other rules while creating security for them. And increasingly, earlier we have seen that personalization used to happen mostly in the retail space. And now we are seeing that also in the investment space also. You can see the Robinhood investors are there. So who are increasingly become more and more democratic. And also we can see the crowdfunding. So people are also doing investments based upon their investment passions. So that creates new technology demand for that to cater to such kind of diverse needs of these customers. So to summarize, technology needs to evolve to is evolving to cater to the diverse needs of the customer, and it is increasingly becoming individualized based upon their needs. And security needs to be also evolving as we go for the personalization of the products for them.
Perfect. So I think you touched upon some very key points. Demographic of customer, sociographic profiles, ease of use, and trade-off on security. That's an interesting point. Just kind of segues to my next question was on how important this whole personalization. And I was going to come back to you, and I think you already touched on this aspect. Satya, but do you really think that there is room for personalized, financial services products? Financial services products are like really created for mass markets, right? Is it a big deal, first of all, that, banks or, insurance companies, mutual fund houses, they do end up creating personalized products for customers? And do you see, what kind of risks do you see? So those were the two parts to my questions. If you can elaborate and throw a little more light, please. You might have to unmute yourself, Satya.
So briefly, I will share my screen. Okay, so I think this this was one of the so this one of the speech I gave long time back in IIM Raipur. So that time it was around 4 years back. So that time I think some of these things were not possible or not feasible what we were thinking. So this intermediation is one of the key. So like what Prasanna he discussed about that. So I will give you some examples. So we can see like the trading without traders. So this is one of the high-end banking thing. So I was in Credit Suisse where we used to work, where we had around 50 traders in the desk. They were trading, and they were replaced by algos. They can't be totally replaced. So they were replaced by around 10 algos, which is a mix of 20 traders. So you can see how the traders have been come down with a mix of different people. Of course, we have to enhance the security because the algo trading, it encompasses the intraday risk, and also we have to build simulators to do that. So you can see earlier it was not emphasized that we need traders for trading, but now it's disintermediation is possible, that trading without traders, service without branches, digital banks, we're already seeing that. Intermediation without balance sheets. So that also we are seeing through the SBP vehicles or like the SPVs or the other special purpose vehicles, we are seeing that disintermediation. Lending without deposits. So this model also has been totally disrupted. We are seeing that payment banks, they're lending another peer-to-peer lending. So they don't have deposits, but they are doing that. Investing without managers, so that we are seeing that Robinhood traders, so they are investing. So this is a peer kind of social learning platform. So they are learning, and they're trading they're investing without any managers. So M&A also similarly, we are seeing security without privacy. So is that possible? Yes. We are seeing like a blockchain kind of a solution where the customer data can be also put, and also without any they can be protected. Also it will be in a kind of blockchain, but the customer details will be also protected. So we can see that security without privacy. So such kind of things. Payment, already we have seen payments without middlemen. Operations without infrastructure, the cloud infrastructure. So banks are going without those infrastructure. Of course, there are securities like the in-premise clouds or the hybrid kind of a cloud, but already banks are moving towards this kind of possible scenarios where we are trying to disintermediate the intermediaries. And you can see around 4 to 5 kind of scenarios we are seeing: banks, agile, collaborative, digital focused and exposed. Operations will be mostly cloud or operations as a service. It can be risk as a service, operations as a service. It can be finance as a service. It can be like for the mostly for the smaller banks. They don't have the infrastructure. So it will like they can share the data needs, they can share the valuation models. And similarly, we can see the blockchain has having a direct impact on the world of payments, trade finance. And we are also seeing algos were only in trading, but now we are seeing in other areas also. Like we can see in the driving space, in the other space, we can see increasing use of machine learning algos. And also we are seeing evolution of marketplace lending, and we are seeing like the Marcus model, which the Goldman, this is still the gold standard of all the models, where Goldman didn't have any presence in UK, but it was able to achieve a big customer base through a well-created cross-platform based applications. With that, I will give it back to
Oh, fantastic! I mean, this is a
Deepak.
brilliant slide, and I'm pretty sure that people who tuned in or on Zoom, this information is going to be very useful. If I may request Satya, if you can, put up a link or maybe just attach this presentation offline, or maybe give it to the organizers for people to consume offline.
Sure.
What I really found hard hitting were things like some of the future scenarios that you discussed: traders without trading without traders, security without privacy. I know you can't imagine these kind of things today, but there are very successful pilots, and we've seen banks that are digitally native trying to go after these pieces with by embracing this kind of technology. And this power is there, even in the consumer's hands. I've seen multiple courses on YouTube where you can download a Python pack and with MATLAB and libraries, etc., and create your own algorithmic trading options. And you can try it in your sandbox. If it works, then you can tweak it and put it into your account, and it's going to trade on your behalf. And it's just 100% code, right? If you're confident on the piece of code that you've written, then the algorithm takes care of all your trading, all your technicals, as we see. I mean, these are very phenomenal use cases that I'm sure will be very beneficial for people who are attending the conference to take away from. I want to just segue into what Deutsche Bank is doing. A lot of Satya showed a lot of future scenarios. Subbu, I know that you guys have done a lot of work in tech. You had a bit of a bumpy ride, but all that is like behind you now. It's like you're very focused, and you've exited all the businesses that were bleeding, and now you're like ready to jump off and sort of segue, and you want to look at investing in technologies and stable organic growth. How do you see this playing out in your world, specifically, Subbu?
So, in a very broad sense, we had a tough time, and we realized that we have to be very clear. Do we look at technology as the solution, or do we also look at it as a byproduct? And we realized that we have to look at technology as one of the solutions. So, I think if you look at things very broadly, it also ties down with the way you embrace technology, because there are two ways to do it, right? Because the disruptive technologies keep coming, and either you jump head on into that and say, okay, fine, I'm adopting this, or you give it a pause. Because one thing about technology is that new firms keep coming, new startups keep coming, they keep pushing technologies. Or you can go the other way and say, okay, I'm going to be laid back, I'll just keep running this. But if you look at India as well, right, the firms that were on the top of the charts in 1991, a very different set has taken over right now, meaning that disruption, innovation, that is the game changer. So as far as we are concerned, what we realized is that we were trying to do too many things at the same time. I'm talking in the technology sense, and that's what many banks have realized as well. We try to run infrastructure, we try to run a lot of platforms, and just let's take an example, right? Every bank, every large bank especially, is a mix of inorganic growth, organic growth, different technologies playing out in different areas, and then we try to stitch all of that together in whatever best way possible. But what we looked at when we looked at the cloud is that's a very good way of resetting and looking at things afresh. And one more thing we realized is that typically technology choices have been centered around what is the best technology for this use case, what is the best technology solution for this region. And then what happens is you have a diaspora of technologies competing with each other, and adding to the challenge is that technology market itself is always changing, and whether you get the right support, you have embraced an open source technology, are you getting the right support for that? A lot of these things are in question, and then integration again becomes a challenge. So one thing we thought is, let's not look at the best technology for every use case, but let's look at something that solves most of the use cases, because that makes life simpler for all of us. So that is our thought process while going into the public cloud. And that was something we did in the on-prem world as well, right? Because when we had our Hadoop infrastructure, we had two choices. Let every business try to run its own Hadoop infrastructure, try to get the best technologies within that stack by themselves, or try to go with the least common denominator approach, have a single Hadoop cluster where you offer maybe not the best set of technologies, but technologies which will be offered and will be supported, and businesses can take care of what they can do best, you know doing better business, instead of a business guy trying to run technology and everybody trying to do everything. So that is one thought. Try to look at a tech stack that serves a larger part of the bank, and try to partner with a cloud vendor, because there are two ways again here, right? You can either have a vendor client relationship and try to play the same game of the banks becoming technologist, or try to trust a technology provider, say in this case Google, who knows its game, and let Deutsche Bank take care of its business problems and have a blueprint that will be guiding its direction. So those are some of the things that we did, I feel, which are working out well.
Excellent. So basically, just stick to your competencies. Just
Stick to your
don't do too many
competencies.
things.
Yeah.
Don't do too many things. Ignore the corner use case.
Yeah.
Don't be obsessed about Acha. Does it solve all my business problems in with a single sweep of solution? All of that is not going to happen. Yeah, absolutely. Very, very wise piece of advice. And
but I would differ a bit. See, if we kind of stick to our kind of plate where we are good at, we will end up basically doing the quicker stuff. I would say like we should be open to the disruptiveness which is happening inside the world as well. That the bank need to think about the disruptiveness. See, we do have large customer base. So if we talk about, we do have large amount of data with us. What we need to think about is how best possible use that we can take out for the particular data that we have. So the mindset should be, yes, we should be disruptive, we should be open for disruptive, although whether we can implement it in the current state of the world that we are in the current legacy structure that we are in, whether we were able to implement it, that would be a different question altogether.
yeah,
I think
so
the way we have to look at it
you're
all.
saying this the way, if I can just interject, so you have come from the global capability center, right, Dheeraj, for NatWest?
I came from the API center for NatWest. So basically, I came from the technology NatWest bank.
Okay. Yeah. So you're slightly differently, I would say you're differently positioned. Now I understand you have like maybe what 20 million customers globally, and then you are also trying to take this innovation head on. But how do you see this in your environment? It's a slightly differentiated approach than, let's say, what a Deutsche or an RBL or a Kotak will look
Yeah.
at the problem, right?
I would say like NatWest, previously called as RBS, is one of the oldest bank in the whole world. It started its very first banking operation in 1727, if we are talking about. So that was the second bank that has introduced notes in the whole world, if I talk about. So NatWest has just being a rebranding stuff that has happened to RBS, but RBS has been the key press. And with RBS, for talk about, there are so many legacy infrastructure that is present within the RBS. So if we talk about innovation within that particular legacy, that itself is a challenge. Bringing a new change inside the same environment, it itself is a very big task for us. So if I talk about that particular innovation, bringing that particular innovation around the processes, that itself is a big change. And frankly speaking, the processes are there or for a specific reason. It's not that processes should not be there. Processes are there and that should be there because they have a certain thing, certain dilemma, certain decisions that need to be carried. Because banking is not something that you do it one-on-one to one person and that only two persons are at risk. With banking, there are kind of billions of customers that would get at risk if you don't follow certain process which are there. But only thing is that we need to basically think about the innovation that we can bring it inside the breaker process. How we can shorten the process, how we can smoothen the process so that we can react to the market fast. Like if I talk about this open banking, why this open banking came into the picture, the very first regulation that basically derived it was CMA, which is Competitive Market Authority, which brings it into the picture saying that thing, okay, open banking now need to be implemented. Why? Because there are challenger banks which are coming up. There are digital banks which are coming up, which require license, and they do have the license in place. But what they require, they don't have customer base because all the big banks have taken all the monopoly for all the customers. And they don't know what products, what features they are offering. So Competitive Market Authority came into picture and give the bigger regulation to everyone, to our top 9 banks. So make your product open through APIs so that everybody is aware of what are the products, what are the features, what are the information that you're offering. And if basically customer consent, then based on customer consent, you can basically display customer balances, customer transaction, customer can do the payments also. That we're currently seeing within India that is taking a boom right now. So that was basically one of the stuff that why processes came into picture. And in that particular case, it's basically improving the customer journey altogether. So what we may need to think about, okay, we know that these processes exist. We know, okay, this is the innovation that we need to do. On technology side, we have to be prepared about on the technology side, that will not be basically right now is billion customer, going forward it will be trillion customers. Most of the customers that you think of will be switching bank account like this. If I talk about my father days, my father used to have bank account only with one bank, which is SBI. Now, if we talk about our days, we have multiple bank accounts. Those who are giving a good offer, we just basically do a eKYC and open a bank account. This is how the millennial population which is coming up, they would react, they would work upon. And we have to have a technology, otherwise we'll be out of the market in our case. One thing that Subbu has mentioned and Satya has mentioned around the innovation that they're seeing on the Hadoop space, on the cloud space, that is where we should be looking forward. That is where we should be thinking about it. How should we have more cloud space, more technology to basically kind of evolve into the particular destructive environment?
Yeah, perfect. I mean, that's actually a great segue. Just wanted to talk about open banking space for a little bit. This is very interesting because it, came as a directive from the regulator. We saw, PSD2. We saw that, we had too big to fail banks in the UK, and they wanted to sort of open up and invite, smaller players. So customers had more options than just the Barclays and
absolutely
to choose. So yeah, I mean, this is really a very, very open space. RBL has been really in the forefront of open banking. We have a bunch of APIs that we offer to our fintech companies to sort of just play around with and come up with innovative products and solutions.
Even if I talk about in India, we are seeing a similar ecosystem with the launch of AA, which is account aggregators, which is basically broadened by RBI regulations. So they are also coming up. Because right now, what you see on your Paytm or any of the UPI app, you see balance and payment. That to the journey that you see. And some apps provide you the features of transaction also. But their banking is more than that. Sure. Banking is basically setting up future dated payments, doing an international payment. How about sending someone to basically staying abroad? You want to send some payment to that. That still take a day to basically get it reflected if they're not on the same bank. How about innovating the application? International API, which we have basically their provision within the open banking that does the payment right now roughly in 5 minutes now, with all the FX calculation and everything settled. So within India, there's a huge amount of growth that we can see. with coming up with this API culture?
Yeah, absolutely. I mean, that's, bang on the way you managed to spot that trend. Definitely, I would tend to agree with you, Dheeraj. There's a huge potential, huge upside, huge innovation, potential for this. I just want to go back to, what Subbu was mentioning, while we've talked about, all this technology and, next gen tech and, software and everything. How do you see the actual architecture, keeping up? Because, most banks, will typically have, what I will call as the spaghetti model, right? I mean, you have a ton of legacy, you have new age technologies, you have fringe tech, and we invest in all of that, that is emerging in the market. You'll have exploratory use cases, etc. And I know you talked about a little bit about, businesses being able to spin off their own instances, run, their own infrastructure, manage their own infrastructure. How do you see this whole architecture playing out?
I think architecture has been pretty siloed. As I mentioned, it's a case of multiple things: inorganic growth plus the technology choices, and it's been pretty siloed. And there's a lot of stitching that happens at various ends, and there is more work needed to operationalize things as compared to engineer them and offer new products. So that is something that is changing. And again, the cloud is a big reset button that is seen. So I look at the architecture question in multiple ways, right? If you look at the data architecture, we have had two streams. One is the transactional data, which is the operational data, and then the analytical data. And the operational data feeds into the analytical data, but a lot of times the feedback loop is not complete, which in some cases doesn't help the businesses take a holistic decision. They're taking good decisions on analytics, but they could have done better had they had better answers at their disposal. So I can see that in the cloud, the world of transactional and analytical data areas are becoming coming slightly closer, because the technology is no longer a barrier. And again, from a data point of view, ThoughtWorks has pioneered something called the data mesh architecture, because what has happened again, which has led to the separation, is that there is an operational team that takes care of day-to-day transactions, and then they throw the data over the wall, and the analytical team catches it, and then they run with it, cleansing, and then the data scientists get on it. Your marketing campaigns are on top of it. So what is now data mesh telling? It's telling that let the data domain handle both operational as well as analytical data, so that they are better empowered, and let it not be handled by a separate IT team. So that is one thing on a pure technical standpoint, and that covers the whole gamut of data science, analytics, and the whole thing. The other thing that I'm seeing, which is more generic and less from a data perspective, is so far you mentioned a lot of things about the way fintechs are changing the world, and always fintechs and the big banks, they've been seen as the ones with loggerheads, right? So fintechs are very fast in innovation, but they don't have the customer base, they don't have the trust factor right now with them. Big banks have the trust factor, they've been around for a while, but they are not able to change as fast as what they would like to do or the customers would like to do. So what we are seeing again in conjunction with open banking is that something called a bank in a box, wherein banks are saying, why do we compete with fintechs? Can't we partner with them? Let us act more as integrators, because the world of regulation is so different. It's different in Germany as compared to Sweden, compared to UK. So instead of we running behind trying to change everything, we'll have local players who are very strong in that. So we will have our label out there, our brand out there, but it will be powered by these vendors. And if a customer has a choice, if not say Razorpay, he can choose a different one, and that tries to make the bank the aggregator. He is the trust factor, and the engines are ultimately that of the vendors or the third parties. And I feel that is one model that will pan out as we go along. So that is one area that I see a disruption happening.
Awesome. So, we also work with ThoughtSpot, and we work with a plethora of presentation layers, in the bank in terms of data, analytics. But I just wanted to ask you, Subha, just as a follow-up, to this question. So, in my mind, there are, three aspects. There is a data plumbing aspect or data engineering aspects. Basically, one team that, understands different, schemas, get into the actual data dictionary, understand how to plumb data out. That's the core engineering, area that I see. And then you have the data stewards, right? Typically people who govern and cleanse, and they do a lot of transformation to make that data meaningful. And then you have a bunch of guys who are like analyzing at the periphery, make connections, draw the dots, be able to make predictions, and provide recommendations to, let's say, the management on how the data is trending, right? So typically in banks, how is this structured? Are they like three different teams? Is everything under technology, or you have like businesses that are partnering? Would you be able to advise people who don't have data marts and data mesh technologies that you spoke about? How should they look at this structure?
No, you are right. You are right. So the typical challenge in the world of analytics is that the data and metadata are pretty separated. So in other words, you have metadata at the time of you conceptualizing the data domain, and then metadata stays intact, and data keeps changing, and there is nothing that keeps feeding back into the metadata layer, which is what the stewards are responsible for. They take care of that. So what is happening nowadays with this whole data mesh plus the newer technologies is that we don't want to make metadata a second order citizen. We want to make it a first order citizen. So say, just to let me give an example, right? All applications are supposed to say what exactly is the PII that is residing in your application. So we start with that saying, yeah, there is nothing. And then gradually we add an email and we add more things, but that doesn't get updated back. So what we are doing now, is as soon as the data comes in, they have to, it is fed back to the metadata layer, which again, people might be careless and they might not update it. So again, cloud has various technologies for data loss prevention, data de-identification and all of that, which checks whether there is really a metadata and it tries to flag back. So the data stewards are better empowered. Else it was all a manual form that they had to fill, because there are a lot of things out here. It's not just metadata, but data residency rules, data retention rules. All of these, it is very difficult to keep track as your application goes along, and people are trying to stitch that together. From an end user data scientist perspective, yeah, there are better tools coming in. We don't want everybody to be a master in Python. We are trying to get a bit more of auto ML, etc. A bit more of ease in terms of data science, but with again a bit of caution, because you don't want a marketing analytics in the hands of a person who's just learned data science over a YouTube video and he's onto it. He want some bit of a domain expertise out there. So that is there, but things are becoming easy in that front as well.
Fantastic, great. I mean, great insights. I couldn't agree with you more, Subbu. And this is exactly the way. I mean, it's sort of like a reassurance the way we have structured, some of our data problems in the bank. So thank you for those inputs. I want to just move to, Satya, and Satya, you're from Barclays. You work with Rice, and so you have a reasonable, perspective, a ringside view of what's actually happening in the ecosystem. And I recently read that Barclays has infused a lot of capital to accelerate growth. You're seen as a player with very heavy strong fold in corporate and institutional banking,
Yeah.
in that particular space. So how do you actually see some of these digital solutions fitting into next generation banking, uh, in the context of customer data privacy and some of the aspects that we just discussed in the panel?
Sure, sure. Before that, I will just add one more point to what Subbu said. So data is the new oil, as we already said. So data used to bring us revenue, but lack of proper data can cost you regulatory capital also. So that is the new dimension. So I also handle the regulatory projects like the Basel 3, Basel 4 regulations. And as part of that, so we have both standardized approaches and modeled approaches for both credit risk, market risk, counterparty credit risk, and different thing. So especially for larger banks, if we having both big corporates or IBs. So if we don't have proper data, so then those products will be classified as exotic and the capital charges will be huge. And so now there's an increasing focus because of the Basel IV kind of regulations and market is like FRTB kind of specific regulations to get proper data. And so regulators are now punishing the banks if they are trading opaque products or they don't have proper underlying data. So then it will cost you regulatory capital. So now it's also costing us not only missed opportunities, but also costing us regulatory capital also for data. And I will quickly share screen. So again, to the same point, 1 minute. Okay, so that's what I think Subbu and Dheeraj, they already mentioned. So like earlier, our channels, we had one kind of channel. So
we can't see your screen yet. I
1
don't know
minute.
the others, but yeah, I think
Are you able to see now? Are you able to see now?
Not yet, Satya. I think it says. Oh, no, I'm not able to see it yet. What about you?
It has started screen sharing, but I don't see anything.
Yeah, I think it's taking a little bit of time to load.
Okay, 1 minute. Can you see now?
No, I can't see. Not yet.
Okay. No issues. Now? Can you see now?
It seems to be loading. Let's just give it a second.
Okay.
Because we got to see the first time you shared your screen.
Yeah.
But I think now maybe there's something disruptive that must have happened. Unless you're running antivirus.
Okay. Anyway, we are running short of time. Anyway, let me go through that. So earlier we had like product-oriented siloed operations. So mostly corporates will not talk to the wealth, and the fixed income will not talk to the equity. So this kind of thing. So now it is mostly going towards a kind of integrated operations team. So of course, and integrated infrastructure. So like what Subbu was talking about, the Hadoop infrastructure. So what it helps us is it brings it's a big big data kind of a warehouse. So which brings different data possible. So data from risk, data from finance, data from treasury, all together we can have in one go, and then we can have different views, data marts on top of the big data Hadoop. So technology is enabling the cross channels and also kind of a integrated kind of a solution to the customers. So that's what we are seeing. And also we are seeing increased use of data and technology in kind of in risk, especially like adaptive behavior models. So like uh, so that was also new to model. So like as we see the COVID, so behavior patterns also changed in the COVID. So that was, and also the kind of the delinquency. So such kind of things are also evolving. So so our one thing is our models also needs to adapt to the changing behaviors. So gone are the days when we used to review under the periodic manner, but those models are also continuously evolving to adapt to the um, changing environment conditions and the behavior of the customer. So that is also one thing. So that's basically it points to the theory of assumption, which Peter Drucker, he wrote a big article on that. So it said that corporates, our business model, our customers, our interaction with customers, our interaction with stakeholders, our interaction with community is based on theory, set of implicit and explicit assumptions about our assuming that growth will be there and growth will not be there, a state of the future technology. So those things we have to revise periodically. Those uh, um, uh, corporates like the Kodak, which are not able, or Nokia, who are not able to visualize, not able to periodically review the assumptions, they are going to perish in future.
Absolutely. I mean, this is something that I've heard as well, Satya. I mean, like brainstorming, you have what's called as assumption storming. Just typically go through your, assumptions that you just so take for granted. Especially when you're, looking at blue sky thinking, when you're looking to, see into the future and try and, make adjustments to your business models. Absolutely spot on. And I agree with what you said on the theory of assumption and product oriented, siloed operations and so forth. Bang on points. I just want to put each of you in a bit of a spot now. So, but we'll just spend like 30 seconds and no more than that. And then we'll see, hopefully we should be able to squeeze in one or two questions from the audience if there are a few. So in your companies, if your CFO were to give you $1 million to spend on technology, okay, where will you put your money? What will be your big bets? Maybe I'll start with Satya.
I will put on data and customer experience. Probably work on solutions like kind of a Marcus kind of a solution, or a Pingit, which Barclays developed earlier in 2015, where it was like what Dheeraj mentioned. It was a generic app. It was agnostic to all the banks. So anybody can transfer money to any bank. They need not be the customer of the bank. So such kind of use cases we have to develop. So
data
mostly on the data and the customer experience.
Fantastic, very smart. What about you, Dheeraj?
Yeah, if I get £1 million, in that particular case, I will remunerate first myself with that money. Just jokes apart, okay. What I will think about that, yes, if I have this much amount and I have timeline also with me, because with so much money, the only thing that you get less is a timeline. And if I have the timeline also with me, I will try to improvise the legacy structure. I will try to shorten the customer journey. I'll try to shorten the process that happened right now, specifically for payments, which happen inside the bank. If we can shorten the particular journey and kind of think about how blockchain works.
Sure.
The transaction happened within few seconds itself. We can shorten the particular process. Think about customer. Yes, as Satya mentioned, customer experience, definitely. And then my main focus would be, okay, I have now supporting 100 million customers. I have to support 1 trillion customers.
Scale.
What? Absolutely. So what could be the technology that I've been thinking about? What would be my thought process around that stuff?
Fair enough. So you'll improve legacy, make it scale, shorten customer journey and processes. Bang on. Fantastic.
Plus, and above all, my remuneration as well.
Your remuneration. Sure. What about you, Subbu?
Yeah, so what I feel is that every bank and every large organization spends a lot of money just to keep the lights on. So there are a lot of advanced concepts that have come in, SRE and all of that, more observability. So how can we, because all of the fintechs that you talk about, they are the best example of, you never get to see a customer support guy, but somehow the job gets done. So how can we do it in our space? That is the first part. Then that won't be much money actually to spend. That is okay. And the second part is, as both Satya and Dheeraj mentioned, I look at moving to the public cloud and breaking down the silos, because public cloud is technology one thing, but it's a good opportunity to break down the existing silos, because every bank, though however large it is, it's not able to make use of the large size it's got, because everything is operating in a silo. So a better flow between groups is something that a move to a public cloud or any new architecture will help. That is the second part. And the third, which Dheeraj mentioned, is modernizing the legacy, because legacy is something that should not be shunned, because a lot of critical payment systems and a lot of core banking sits inside the legacy. And a lot of times we are afraid of moving that, because that is so much that it's like a black box. So how we can improve that, modernize that, and make it adapt to the scale, because if everything else scales up and if this thing doesn't scale, then that will be a bottleneck. So we need to look at that as well. So those will be the areas.
Absolutely fantastic. I mean, it's almost like a common theme that all of you are thinking customers, and that's very, very like fascinating to sort of observe. I just want to go back to Namrita to see if there are any questions from the audience for the panel. Namrita?
Sure, Deepak. So the question from the panels are, wait a second, I'm just. So the first question from Anita, she's asking which technology available today will change banking in the future?
Yeah, I think this was the last question. Maybe it was just a timing thing. The last question that we discussed, where we spoke about what technologies we will invest on. Unanimously, everybody talked about investing in data, because data is the new asset, investing in customer driven solutions, investing in improving legacy, doing a refresh, shortening the customer journey processes. Subbu already spoke about system reliability engineering, observability, ability to move towards public cloud. So yeah, I mean, that's in a nutshell the last question that the panel discussed, is a straight answer to the question that is raised by the audience.
I would say technology would be keep on changing. Technology will not remain constant. Today we are talking about data mesh. Tomorrow it could be something else. So what should be, you should be thinking about how your customer experience is getting changed. What you want to see from bank. What do you want to see? Then based on that, there will be smart technology solutions that you may need to drive to.
That's a very good point.
Okay. Namrata, next question.
Namrata, anything else?
Yeah, next question is from Narendra. He's asking, how are banks facing new digital competitors?
How are banks facing competition? Okay.
New digital competitors, absolutely, is bank are threatened by that. I would say top banks are literally threatened by that. There are banks, digital banks, which are coming up, which are providing innovative products. So they are basically kind of increasing the whole competition thing. Now the small, big banks, so they are also thinking about what should we bring a kind of different to the customer. Now, if you talk about Paytm coming up, Amazon coming up, Google coming up with their own banking solutions. So bank has to think on that particular lines. What is it that we should basically think about it? And otherwise, we'll out of the market. Nobody will be taking our products in that case. We have been pioneered, so we will get out similarly. So that is what, see, if I talk about does digital bank that has come up, the new bank are the ones that are driving the particular innovation for the big banks also.
Perfect. So to just to add on to what Dish mentioned, I've just actually put two web links. One is from Business Insider, and the other one is from Digital Fifth. And they've actually mapped the ecosystem. Usually it's a revolving chart that people refresh once every 3 months, 6 months, but it's reasonably accurate. It gives you a lowdown on all the top players and who the competitions are. It's not really competition, so banks really don't vie with the fintech players. It's more collaborative, right? Who are the co-platform providers, who are the data providers, who are the market aggregator providers, what are some of the startup solutions in the consumer space. So these are some useful links that people can, the audience can read and digest.
Thanks, Deepak. I just went to the link and they're really very good. Thank you.
Sure. Namrata, would that be all?
Yes, we have 2 more questions from audience. The next question from Rohan, he's asking, is the bank using technology to eliminate the back office?
I would say eliminate would not be the right word. I would say innovate the back office that we've already discussed. That if we have millions of pounds available, if we have enormous money available and timeline available, we'll try to basically digitize the core banking system that we have, the legacy banking system that we have. Definitely. So not decom it, but yes, improvise it if we can. Anything you want to add, Subbu, Deepak?
No, you're right. It's always about moving up the value chain. So even the folks who are doing ops right now, they have a lot of process knowledge which can be used to develop the next automation. So yeah, it's not about eliminating anything out here.
Yeah, unless we get to 100% straight through, back offices, are here to stay. I mean, there's no getting away from it. Back offices are important to do all the boring bits, things that are, under the carpet. Like a restaurant, right? I mean, you have a fancy looking restaurant, but you go into the kitchen,
Absolutely.
you go into the kitchen, you'll never eat at that restaurant. Right? It's going to be chaotic and this and that. So that's important to keep the businesses lights on. You'll need people to do the hard labor. So back offices are not going to go away. They're going to be there. Unless we get to a state of 100% straight through, you're never going to see back offices going away.
But still, even if it's 100% straight through, still you have a back office. Only thing is that there will not be people monitoring it regularly. Yeah.
You will have bots doing it instead.
Absolutely. Yes, Namrata, anything else?
Yeah, one more question, last question from Rajesh. He's asking, is the bank willing to push the boundaries of its business model?
Yeah, Satya, do you want to take it? You talked about a few things on the product silo side. You want to answer that question?
Yeah, boundaries of, pardon, I couldn't hear.
Can you repeat the question for Satya, please?
Is the bank willing to push the boundaries of its business model?
Of course. As you have seen, Goldman Sachs Marcus model. So they didn't have any presence in UK, and it started with a wealth. They created an app for a wealth clients, more than 100,000 pounds, and then they cross sell also other products like lending and other thing. So, and also banks are trying to push. Even JP is coming up with another digital bank. So they're coming with asset light model for new geographies or new segments where there is less capital intensive and it is easy to acquire customers, and the maintenance costs will be also less, and they'll be able to offer new offerings. So the asset light model is another where banks are trying to push the business model. Another, which Dheeraj said, remittances. We have huge remittances, and probably blockchain or the utility kind of a coins. So those kind of things can probably change the whole business model. And banks are working with fintechs. So because both know their limitations, fintechs know that they can't have a getting trust of the customer is a big thing, so that they can't have it individually, and banks have that. And so both are working like credit models. So, and only thing is how they share data through secured API, and also minimal amount kind of data is shared so that they can get the credit decisioning instantly. So such kind of models are there where fintechs are working closely with the banks to achieve these new objectives.
Awesome. Thank you so much, for that, for those insights, Satya. Amrita, if there's nothing else, I want to call it wraps.
Yeah, before ending up the panel, I request all the panelists to smile so that we can take a smiling screenshot.
And the $1 million that we get.
It brings smile.
Well, thank you so much, guys. I really enjoyed presenting this. I really learned a lot from you guys, Satya, Subbu, Dheeraj. Fantastic panel, great insights. I'm sure it is useful for people in the audience.
Absolutely.
Thanks, Deepak. Thanks, Deepak, for moderation.
Thanks, Deepak, for moderating it this well.
Absolutely. Thanks, Deepak.
Yeah.
Thanks, Dheeraj and Satya.
Yes.
Bye.
Yes. Bye.
Thank you all the leaders for adding value to this forum with your insightful discussion. Now we have third panel for the day, and the topic is combating cybercrime, innovation, and frauds in banking. Today, 150 plus CXOs and 350 plus attendees are watching this live on our website. Here I call the moderator, Mr. Vaibhav Joshi from Equita Small Finance Bank, Babita BP from CSB Bank, Sanjay Chamola from SBR Bank, Nitesh Tolia from Geo Payments Bank. Well, we should wait for the leaders. Maybe he will. They are joining. Hello. Vaibhav, you can start the conversation with Mr. Mitesh. Till then, all the other leaders will be joining.
I need to step out at 5:30, so it's okay. We can start.
Yeah.
Okay, Namrata.
Yeah.
Hi, Mitesh. How are you?
I will
Good
go
to have
fine.
you on the panel.
Thank you. My privilege.
Great.
We are
Great.
slightly running late. Can you get me a bit oriented, because I joined in the previous panel and it was a different topic of discussion. So
Yeah, Mitesh. So first of all, let me introduce Mitesh Tolia. Mitesh is a CISO with Geo Payments Bank. And welcome everyone to this panel discussion where we are talking about combating cybercrime, innovation, and frauds in banking. So while we wait for Babita B, CISO, CSB Bank, Sanjay Chamoli, Head IT, SBR Bank, Utpal Chakravarti, former Head AI, Yes Bank, we will start a conversation with Mitesh this side. So Mitesh, the context here being we are talking about combating cybercrime, innovation, and frauds in banking. And if you are okay, we can just have a very candid, interactive session over there. So I have a few pointers that I want to talk about before I get into this discussion. And we all know that there is a lot of cyber invasion, cyber crime related things that are happening. The fraudsters are becoming innovative in today's times, and we are hearing of things like social engineering. We are talking about things like phishing scams. We are talking about man-in-the-middle attacks. We are talking about websites spoofing. We are talking about ransomware. There are things like malware, IoT hacking, and so on. So in these testing times, Mitesh, do you want to touch upon some technology solutions that you think are right to fight, innovative cyber crimes that you would use, or how do you overall look at, this increasing cyber invasion and the innovative fraudsters?
So if I were to just step back a bit in terms of what all we can do, when we start our security journey. So I'm sure people here are quite aware of all the controls that are there that should be done, but it's a journey, and especially if you are adopting the cloud. So you need to look at various aspects of cloud adoption, of security in the cloud, or even in on-site. Now, as they say, the fraudsters are always one step ahead. And for us, being in the regulated industry where RBI, UIDI, and to an extent NPCI, define the framework in which we need to operate, it helps identify a whole lot of controls to be put in place. To the extent some of the controls are very, very futuristic. And at times we need to balance between the customer convenience, experience, and the security control that we would like to put in place. So really, if you ask me, we need to balance between the frauds that were to happen, the impact to the bank, impact to the customer, okay, and the experience. So that's where I would kind of step back with in this area. Besides, like talking about I'm sure here everybody is aware that today most of the financial institutions expose their services. So whenever they expose their service either via API or any other form, they need to be sure how they are exposing it, put in enough and more controls, look at a closed loop monitoring of subscribing to some services from the dark web to be sure that their data is not out on the cloud or in the web. Ensure that your data is secure. So, probably I would say that, while we can always talk about a whole lot of technologies, a simple solution would be to secure your data wherever it is. And that probably you can achieve simply by going in for a security in terms of encryption or securing the data. Like, as you might be aware, UIDI mandates Aadhaar number to be tokenized. Never in the plain text should Aadhaar be stored. Like, they insist that only the last 4 digits of Aadhaar should be visible, which is what we see on our COVID certificates or any other place that you would see otherwise. So, what we are in essence trying to do is ensuring that our entire data is secure. So even in the worst case, if it were to get leaked, we are not worried in terms of be it falling the wrong hands, but the security key is to encrypt and access the data is with us. So I think that would be the starting point of our discussion. And then of course we can talk about a whole lot of technologies across, across, absolutely. So whichever area we can, discuss about. But I think once we secure our data, and that's more or less what the PDP bill is going to be all about. One is ensuring the privacy of customer data, and two, putting in enough investments to ensure that you safeguard the data, even in case it gets compromised. So, that's a broad contours that we need to focus upon.
So very well put, Mitesh, over there. And data security is extremely important. Encryption is extremely important, and masking of data the way Aadhaar does it. And we saw that there is a virtual number that gets created, and all those things are happening. In fact, so much so that Aadhaar even doesn't allow us to store the e-Aadhaar that is generated, and and there is a Aadhaar vault through which that happens. Yes, that is definitely the stepping point. And to add to what Mitesh you said, I also feel that consumer awareness is also extremely important, because we banks are regulator institutions, and at the end of the day, it is extremely important that we educate our consumers, especially small finance banks and payments banks, because we are trying to target consumers who are either unbanked or who are underbanked. And a lot of these consumers, while they may be tech savvy, they fall for social engineering, where fraudsters actually call them up and ask for an OTP or their card details, and invariably some of them end up giving it. Now, while technology is becoming so much fast paced, and there are so many things coming in, often majority of the frauds are resultant of the social engineering things. Okay, we will not even get into things like man in the middle or malware or website spoofing and so on. Yes, they are there. So moving to that, now can we talk about certain technologies that you feel we can use to fight innovative cyber crimes, Mitesh? What is it that you use? I'm sure that when you are doing a new app, when you are creating a new program, you would be carrying out extensive AppSec, application security testing, so on. There will be a robust framework in place. You will be going through all sorts of certifications and stuff. So can you shed some light on that? What all new technologies you use to counter this?
So I'll tell you one particular example, and using that we can get into other aspects of development. So, typically all our accesses are via your app. Today, your digital presence is through your app, and the customer may not know, but they might have a screen sharing application installed, grabbing the screens and capturing the data. So in turn, capturing your password and the pins that you entered on the app, or there might be a malware sitting on the phone itself. So, it becomes finally the responsibility of the bank to safeguard its customers. Now, it is only through customer communication, education, and regular follow-up that we can do. But by democratization of the banking account today, a large mass is expected to be onboarded by especially the payments bank, because really their field of operation is limited. But when that large unbanked mass comes into digital banking, the challenge is to ensure they're aware of how to safeguard their handsets. So going further, there have been people who start using rooted phones for whatever reason that it gives them the benefit, and in the process they lose all the data. So far as they lose their personal data, there is a limitation in their liability. But if they lose their banking data or anything on our side, we try to ensure that we do a device binding, we do a two-factor, we do a fraud monitoring, pattern analysis. But there is only so much we can do. Beyond that, if your phone itself is compromised, from your handset, there can be applications or transactions that can trigger a credit or a debit, rather, for that matter. So that's our challenge today. One is to educate the customer at every aspect of using their phone and safeguarding. So let's say today we are looking at technologies that will be shielding my app, containerizing my app, the banking app, from all other applications that are there on the phone. So even if the phone is rooted or if it is compromised, it doesn't affect my customer's experience or the data. Right. I hope I answered one aspect of that whole chain of things. Apart from the fact that, of course, the entire release management cycle itself is completely changed. Today, we have realized that in terms of go-to-market and the limited time that the development team has, we have tried to shift all the responsibility of initial coding and its testing to the development team itself, given them the tools and empowered them there. We have ensured that it is in the code itself that we have secure coding practices imbibed in the development team to ensure that they take care of the initial part, so that there is only limited feedback that the IS team can give. So, I would say there are a whole lot of technical and non-technical controls that we need to look at to secure our ecosystem. Some of them today would be, of course, on the API frameworks to take care of securing all the Kubernetes platforms, ensuring that downloads are from secure GitHub sites, which have a large following and is, having some good regular updates coming out. Look at micro segmenting your networks. Okay, so there is a whole plethora of issues that can be addressed based on the concern. But yes, to answer your question from the customer's perspective, I think it is a balance that we have to maintain between the customer user experience and the technologies that can be thrown in to secure the transactions.
Thank you so much, Mitesh. And I will add, few points to what you said. Some basics of cybersecurity, and we talk about SSL encryption, which has to be of utmost importance. SSL protocol on websites and payments page. Then we talk about having PCI DSS compliance. PCI DSS is 12 data security requirements that every merchant has to follow. We talk about tokenization that helps authenticate the customer during a purchase. We talk about 3D secure authentication. We talk about banks implementing fraud risk management, and I would want to dwell maybe 10 seconds on that point. FRM is extremely important because every transaction needs to pass through FRM checks, because at the end of the day, FRM check is what determines whether the transaction is legit or not. And at the end of the day, there are so many frauds happening. FRM is also automated nowadays. You put in algorithm, you put in your criteria, and FRM, it checks your transactions. Then there is something like second factor authentication. Yes, we do it as a basic. My point where I started, application security testing for vulnerability detection, and resonating with what you said, because we give so many APIs, we integrate with so many third parties. So talking about something like a trusted app. So yes, Mitesh, very well put. I have one more question to you, and this comes from, it is like a built-up question to what you have been talking about. So, there are mounting customer liabilities and cyber crimes. So what is your take on this, with respect to mounting customer cyber liabilities and cyber crimes?
So if I were to talk about cyber insurance, okay, and how we are going to limit. So, again, the question of customer experience comes in. Like traditionally, you would be aware that during the internet banking days, people would be having a cooling period, that whenever you add a beneficiary, it is only after 24 hours or 48 hours that you can do transactions, or there are other alternatives that within that period you can do certain amount of transactions. Today, everybody wants speed, and by virtue of having speed to be able to transact, there is a lot of risk involved. Okay, so we need to kind of balance between giving that flexibility to the customers. Yes, we are always ready to give, but being able to control. So, if you can be more specific in terms of, which area should we track? Because today the challenge with cyber insurance is a bank employee themselves going to the web and, using the same email addresses and the same credentials. So whenever we go in for a cyber insurance, we generally do a lot of assessment of the bank. They do the profiling of the bank and its staff. And in that, what happens is we realize that some information is out there in the public domain. So that causes the premiums to go up substantially. Okay, so that is from the bank's perspective. Now comes from the customer's perspective. There have been times when we have realized that the customer has been consistently using the same passwords or the same passphrases or something similar, or sharing their data or details like their date of birth and various other things on various social media platforms. Now, there have been instances where customer come complaining saying, why has the bank published its data out in the public domain, but actually it is not the bank which has done it. It is the customer themselves who have done it. So, those are instances where the bank has to take care of such liabilities and respond to customers. So, what I see here is a market, as you say, built up. So we need to educate the customer that they should not even be sharing too much of information on the social media, and whatever their credentials they use or the pattern of usage of the banking applications has to be following a particular pattern to ensure that they don't get easily compromised and somebody is not able to fingerprint their behavior. I hope to some degree I answered you.
Yes, Mitesh, definitely you answered it very well. And, I will add a couple of points over there, because with so much digital accounts opening now, we have seen now CASA opening digitally, and, all the advent of neobanks, challenger banks coming in, and with video KYC complete digital journey, a lot of these bank accounts are also used as intermediate accounts for these fraudsters, for siphoning of money. And that is becoming a challenge. And that is where I was coming out from a cyber fraud, cyber liability perspective, because that is a challenge that the bankers like you and me we face day in, day out, Mitesh. So which is a fact.
Sorry, interject here and share a very interesting perspective is, with the low KYC accounts, customer can hold balance up to a certain value. And with video KYC coming in, of course, all the due diligence prescribed by the regulators are followed. But eventually we land up having to, what should I say, do a transaction where, our account is only used as a conduit. So there are a very high spike that we have witnessed in the cases where LEA, law enforcement agencies, have been contacting the bank. And that has got us into both, a challenging position and also a sweet spot in terms of we are sitting on funds which are frozen in certain bank accounts. Okay, and we don't know what to do with it, right? So the accounts have been identified as fraudulent accounts. We have frozen it by virtue of our fraud management solutions flagging them off, or the LEA, law enforcement agency, flagging it off to us. But then, we really, at the end of the day, we are holding somebody's funds, which has to be swept out somewhere, and we don't know what to do. So those cases are increasing. Something very peculiar we have seen off late is very low value frauds that are happening, because there we have seen people not bothering to take the effort to go to a cybercrime cell and log a complaint. But if you do a sum of parts, the value goes up substantially. Right.
It does, Mitesh. You are absolutely correct. In fact, if we use this third-party PSP apps on UPI, we'll realize that, every day I keep on getting this tens of requests that so-and-so has requested 10 rupees, so-and-so has requested 45 rupees, so-and-so has requested 150, 200 rupees. And these are so low value transactions that we'll not even bother. So we as bankers will ignore it. The people who are aware of this will, ignore it. But then it says that, IRCTCC has requested something from you, and IRCTCC, and it looks like a spelling mistake, but it's actually a fraudster. Okay. And this is where it comes. And then there is a whole host of those cyber cell notices that you keep on getting, and you have to clear them, from time to time. So Mitesh, any closing remarks that you want to make on this topic?
So, it's a very, very broad subject. So, really appreciate the short time in which we are having this discussion. But I think we will have to first start off with the customer experience, and to ensure that educate the customer of what are the do's and don'ts. So if I were to, draw back the analogy a bit, good old days, people were aware that a checkbook of a bank has to be kept in a safe. The checkbook, we should not sign it unless you know to whom the check is issued to and the amount is filled. You need to cross out the bearer, etc., put a date. So, those kind of precautions people have learned over a period of time. And I think we are in a similar journey here in our digital experience, that people start building up and realizing that if their phone is being used extensively, probably they can have, a secure set of applications getting installed, or, there is a risk. So going for containerized application, if that bank is offering, to be able to do a secure transaction. Finally, today, I think we are at a point where people are eager to do digital transactions, but we need to give them a comfort that, bank is there with you to help resolve any issues. So, that increases the bank's responsibility.
Absolutely. Thank you so much, Mitesh. And you had requested when you had joined that you wanted to step out at 5:30 or something. So I'm going to not hold you more. So thank you so much for that.
Thank you very much for having me on the.
Thank you,
About
Mitesh.
Mr. Satya has also joined us.
Yeah, hi Satya. Hi Satya, how are you? I was following you on the panel earlier to this panel number 2, and
Satya, you are
I
on mute.
was
Hi,
and I
hi,
was
Vaibhav.
listening
Can
to.
you hear me? Hi, Mitesh.
I Satya, need to step out. Thanks.
Yeah, thank you so much, Mitesh. So Satya, we were just discussing with Mitesh on some points on cybersecurity, and we were just talking about a few technologies that we have that industry has been implementing to fight innovative cyber crimes and so on. And then we moved on to the ever increasing cyber innovation and innovative fraudsters, and various methods that are being used by these fraudsters. So specifically social engineering, phishing scams, met in the middle, website spoofing, ransomware, malware, IoT hacking, and so on. And then we moved to mounting customer liabilities and cyber crimes. And I tried to understand what was Mitesh's take on it. So Satya, there are multiple points that we can talk on this particular topic, right from risk and security in cross-border payments, trade finance, to proactive cybersecurity measures for fraud and forensics, to financial and cyber crimes in the digital world. So, but I'll leave it up to you. What is your take on this entire thing? Because this is a Pandora's box. Cybersecurity is a Pandora's box, and the moment you open it, there are like hundreds of things that needs to be addressed. What is it that you look at it, Satya? How do you look at it?
Sure. So I will first come with the enterprise risk framework. So earlier from the enterprise risk framework, we had market risk, credit risk, operational risk. So those were the principal risk which banks used to consider. And based upon that, we used to allocate capital also for those risks. And now additional risks are being added, like climate risk and also enterprise risk. The cyber risk. The cyber risk is also one of the key principal risk. Besides, it's similar to like uh, credit risk or market risk. So these are becoming more and more prominent. So as you see, there's a famous case, the Bangladesh Central Bank. So even the central bank are being hacked. So as you see that happened on a weekend, and only thing which saved the bank was the printer, the printer which was attached to the Swift program. So that got hanged. So because of which the program hanged and they were not able to transfer after a certain limit. So so that calls for an integrated approach. So that's why the banks are viewing the cyber risk is also part of the enterprise risk. It's not an isolated risk, but it's part of the enterprise risk. And threats can be both from outside and from inside also. And so I'll let mostly look after the physical risk. So everything can be keep locked up, but enterprise, your firewalls are open 24 hours, 7 days a week, all the time. And so we have to be cognizant of both internal threats and also external threats. So we have seen like what happened to the Snowden kind of a thing, such scenarios, such kind of scenarios. So to deal with such kind of scenarios, um, basically we have to go for like simulate various scenarios and try to adapt our security mechanism to deal with such kind of things. It's more kind of a patterns rather than kind of a pattern analysis and then bolstering our defenses, rather than looking for uh, our typical antivirus, like once they attack it, then we just upgrade it. So this will not kind of work, but also look at various scenarios and also simulate this kind of attacks. And it is becoming more and more important because like as you see in the COVID situation, so more and more things are going digital now. And so branches are reducing, and most of the transactions are happening through the bank branches digital branches or the digital banking. So such kind of things you are seeing more and more, and it is becoming more and more sophisticated also. So like even NPCI, if you see that, they also struggled with that kind of a initially to cope with the fraudsters. Like when you receive money, so it was very simple education. When you receive money, you don't have to enter your OTP. So such kind of simple messaging helps a lot in bolstering the cyber risk, and it will become more and more prominent as sorry about that, as banks are expanding beyond the borders. So like if you see Goldman Sachs, so it is increasing. It is, hold on 1 minute. Okay. So as you see, banks are opening like digital only banks. So like we've seen as a markets like Goldman Sachs have opened in UK, or DBS has opened in India. So that's where cyber risk will become more and more prominent.
Absolutely, Satya, and thanks for that insight, because I largely believe somewhere that it is the consumer from where the fraud starts. Okay, and being not to sound like a broken horn, but I've made that point already a couple of times on this panel. So my take on this is very simple, that at the end of the day, we have to make sure as regulated institutions that we make the consumer amply aware of all the aspects, and then we have to put in enough and latest technologies in place to ensure that across channels, across products, across processes, we should have sensors to make sure that wherever a fraud is happening, whether it's in a transaction or whether it's at a product level, it needs to get flagged, and the moment it gets flagged, there has to be an addressing mechanism for that particular fraud. And this is what I was talking with Mitesh earlier, that with the advent of digital banking and with digital CASA getting opened, now in just one of my programs itself, in one of the neobanks that we launched a few months back, you can open a bank account in 2 minutes, flat 2 minutes, and you can open a bank account. Okay, completely digitally. And now imagine, when your entire cycle of, your minimum KYC and everything, you're capturing details and bank account creation and all that, when it happens in under 2 minutes, then what kind of, while digitally there are enough and more security controls in place, now, these kind of accounts, which may not capture that entire, profiling of the customer, which is generally done when you go to a branch to open a bank account. So these are the accounts that are often used by fraudsters as a account in the middle for passing of the frauds. So that is where banks and largely also now fintech companies who are partnering with banks, they work a lot on the consumer awareness part. We keep on telling our customer, we keep on harping that one fact that do not give your bank details, do not give your debit card details to anyone. We do not ask for CV, we do not ask for your OTP. Never have we asked for the OTP, and so on. Okay. We also dwell on a lot of other facts, but I can see that Dheeraj Jaggi has joined us. So welcome, Dheeraj.
Welcome, Vaibhav. Yes.
Yes, and quickly, Dheeraj, I was just discussing with Satya on this panel of cybersecurity, and I was just trying to pick his brain in terms of what is his thoughts. And there are 100 things that we can talk about cybersecurity, and I told him when he joined that it's a Pandora's box. So instead of me dwelling on a certain aspect, whether we are talking about what are cybercrime innovations or cyber frauds, to latest technologies in this space, to cyber innovations or innovative fraudsters and so on. I will leave it up to you, Dheeraj, if you want to, what are your thoughts on this entire, cyber security and the innovative cyber crimes that are coming up nowadays?
Absolutely, man. It's been crazy. So security is a key aspect for any banking transaction, any banking information, anything with respect to bank. If you want to share it across, security is a key aspect to it, and that plays a key role in terms of any of the information that we are trying to access. So if you talk about the customer journey, when we talk about customer journey, when we talk about innovation, one thing that came into our mind is the data, the customer data. How we basically kind of secure the customer data. How do we basically provide the customer that confidence that we have fewer measures of security inside the bank? That means their data, their API, their payment is absolutely safe and there's nothing happening. See, when we talk about customer doing a kind of an activity which basically caused a failure, on the other hand, there are bank systems also which need to be in that particular way, which need to be in that particular security privileged way, wherein it will not be an easy option for any person to basically get and hinder into the bank system. So if I talk about the topmost digital banks that we have, they basically are prone to DDoS attack, which happen quite often. And what are the kind of the innovations that we can do in security is marvelous. Even if we talk about the security concerns that are coming up with regards to the open of the APIs, like when we are talking about open banking, we'll talk about APIs. That means now you don't need to connect to the banking world or banking infrastructure. With the use of APIs, it will basically make your life easier. That means customer can glue to any of the app called an API. And with that particular API, customer can do payment, customer can get their information about their account. Now, with this particular API, with this ease, there's a security risk that also comes into the picture. That how the particular API should be accessible only by that particular customer. How about the information that we're sharing is basically based on a particular consent algorithm that our customers provide. And that consent, only customers should be able to see that.
Absolutely, Dheeraj, and a lot of aspects to dwell upon in what you said with open banking, with banking as a service, with neo banking coming into play, and that entire API is getting exposed to banks. See what happens in these kind of scenarios is, and let me give my 2 cents on this aspect because Dheeraj has actually opened up, a very interesting point for discussion. So when we talk about exposing the APIs to partnerships, and we as banks, whether they are payment APIs, whether they are CASA APIs, and so on, at the end of the day, the partner is sourcing the account. Okay, or it's the partner's front-end room from which the transaction is carrying out. So whether we talk about third-party PSP apps like a PhonePe, Google Pay, so on, or we talk about neo-banking partnerships like a NeoX or a Fi or a Jupiter or a Frio for that matter. Okay, when the rendition of the last mile happens on that particular aspect, what happens is it is extremely important from a regulatory angle also to understand that what all data is the partner allowed to store and what all data actually has to come directly through the API to the bank. Okay,
Absolutely.
what all data can get into the cache, and if so, then for how many minutes the cache can be stored, if the cache needs to be refreshed in 5 minutes or not, in case an API is failing, that does a customer need to really redo, re-input the data, or can it be taken from cache, and so on. It's a a big world out there when we talk about something as complex as open banking or API banking, especially when we have we have a lot of customer validation points like a PAN validation, we have a UIDI validation, we possibly do a mobile number and an email ID validation as well, in addition to maybe a CIBIL. I don't know. If you're talking about asset products like digital lending and so on, then yes, there is a financial profiling engine that gets into play. So when we are doing this, it is extremely important to understand that for an NSDL API or for a UIDI API, UIDI definitely doesn't allow that data to be stored. And that is a very important point that Dheeraj touched upon. Thank you, Dheeraj, for that. Because, we need to understand that, once the data gets captured, it gets encrypted, and this is what Mitesh was trying to say earlier, that encrypted data has to then move to the bank switch, and from the bank switch, it has to go to NPCI switch. From NPCI switch, it goes to UIDI. Then, there is an authentication leg that happens, reverse. Again, it flows, so on and so forth. And then the authentication happens. At no point of time does the data get stored, because regulatory it is not allowed. And why I'm stressing on this point is because while there are technologies like Aadhaar vaults that RBI has allowed banks to open. If this data was to get stored at the partner, and then imagine the type of a fraud risk that would be there, then the entire UIDI data would be open. Okay, and we all know that at the end of the day, UIDI pings you back with a PDF file, which is nothing but a e-Aadhaar, and your entire Aadhaar soft copy is there. Okay, that is why it becomes extremely important. And Dheeraj, now other than UIDI also, and when we talk about something like open banking, even from a payments perspective, if you are on a Google Pay or a Phone Pay or any other PSP app or Amazon Pay, when you are initiating a transaction, that transaction level FRM check is also important at the bank end. Okay, so when we are rendering a UPI transaction or a simple IMPS transaction from a third party PSP app, as soon as the transaction shoots, it is very important to understand what kind of fraud risk controls are put in place, what kind of algorithms are in place. Do you want to maybe dwell on that point for maybe 10 seconds and then we can move on?
Absolutely. See, doing a payment journey, when we're talking about getting a particular amount moved from one account to another account, there's a lot of checks that happen in the place. Okay, so one is a check which is basically, you may be aware of, confirmation of payee check, which is kind of a new API which is coming up, wherein we basically check the payee reference. Happens there is an algorithm which checks the payee name. The payee name doesn't matches, then before initiating the payment, also the payment gets rejected. That is a check. Then there is a check based on the type from where the payment is coming from. Okay, so which is basically the check done by TMX, this test market server, which is there, which basically checks, okay, this is the payment coming from this third party, from this particular browser ID, which has already initiated a payment in the past. So that particular checks comes out, okay, this is not a new customer. This is basically the known customer that we have who initiate the payment. So we understand this. And then there is a check that will basically allow the payment to happen or payment to flow inside the banking system. Now, within the banking system, the payment is flowing. Then there's a multi-factor authentication that happens inside the banking system also. So customer is allowed to log in to the bank credentials. It's not the screen scraping happen because in the past, what we have seen, the TPP, the fintech company that hold customer user ID and password, and they basically mimic the break up page thinking that they are logging onto the banking page itself, which is not a banking page. So that particular screen scraping is all avoided. That means there's no screen scraping. They will directly redirect you to the banking app. From the banking app, they are asked for the biometrics, confirmation. Based on the biometric confirmation, then there is an either OTP, which can be an email-based OTP or it could be a SMS-based OTP. And then only the payment happens. So it's not an easier process. See, if we talk about customer experience, yes, we are disturbing the customer experience, but it's for the benefit of customers that we disturb. So if customer log in from the Scream app, like we know customer devices also. So what customer do use it? Maybe as an iPad customer, so iPad has a kind of a different ID. So which basically get mapped to the customer. This customer uses this ID itself. Then through AI, we are aware of the whole thing that when the customer is making the journey from this particular device, let's make it seamlessly processed for the particular customer. So their customer way, the innovation is happening just basically deciding which is the type of the customer that is basically logging or doing the payment.
Absolutely, Dheeraj. And device binding, SIM binding, extremely important nowadays. And one more point over there, Dheeraj, is that not just device binding and SIM binding, but the way we interact with our devices also gets recorded. And the devices of AI has become so intelligent that at the end of the day, the way I am, typing my password or the way I am typing something on my phone, if I give my password to somebody else and that person tries to type it, the device is going to say there is something, I need a second factor authentication. So we have actually moved to, that kind of this thing. Dheeraj, I will, make this open for you. Share some more points that you may want to share on this aspect of cybersecurity, frauds, cyber innovations, and so on. And then maybe we can open up for audience questions.
Absolutely. See, what I would say that the technology is innovating. The new technology models that are coming to picture, architecture coming into the picture, and principles coming into the picture with the technology. So as technology opens up, there's a risk that also comes into the picture with respect to security. Because most of the technology is new. So there could be innovative ways to basically hamper the technology which we may haven't tried. We are thinking from customer experience perspective. But we have to think, we have to wear a hat of a security person as well when we are going and implementing or when we are analyzing our solution with respect to technology. For example, if I talk about a recent fraud that happened, wherein the customers were opening accounts in a span of few seconds. Right? So this was happening wherein customers were just basically doing a eKYC wherein they have to present a video, and the video was not able to detect their face absolutely white. So giving them 3 tries. After 3 tries, the video basically okay, the customer is authenticated. They're able to basically fool up a whole thing around it, and they were able to create accounts, a kind of fishy account, if I talk about it. And from the fishy account, they're able to accept payments and do a payment charge, which we came to know because we have a particular system which basically monitor the KYC also. So something is not happening right, something is not basically going in the Africa direction. So that was important concern for any of the challenger banks, any of the TPPs that are coming up. That how do you give the pre confidence to the customer that your data, which live with us, is safe, secure, and there's no risk of hampering it. At the end, I would say that yes, we should be thinking about making customer experience delightful, easy, but not on the verge of providing the pre-co risk, not on the verge of securitizing our product.
Absolutely, Dheeraj, very well put, and thank you for that. Let me also add my a few cents on that, and so traditionally banking has been looked upon as a brick and mortar setup, and traditionally banks have been playing very banks have been very much customer centric, and banks have been carrying out a lot when it comes to consumer awareness. But as consumers, while the new age tech will keep on enhancing, and with new age techs, bank will keep on bringing in latest technologies, latest AI ML based algorithms to ensure that there are robust fraud risk FRM frameworks in place. There are robust cyber security framework in place to ensure that you don't get caught. But often a lot of these fraud risks happen within the permissible regulatory limitations, within the permissible regulations, and we need to understand that. And that is what Dheeraj was also touching upon. That is what Mitesh touched upon some time back, and that is what I also spoke on some time back, that in a minimum KYC kind of an account where you are actually allowed to have a limit of 100,000, there the fraud, low ticket fraud can very easily happen, and your account can be used as a pass-through account. So, friends, nothing works like consumer awareness. Let's make it as a thumb rule number 1. We need to also make sure that we keep on regularly checking our statements, because a lot of times we don't end up checking our statements, bank statements. Okay, so regular checking of bank statements is also important. Wherever we are doing a payment, we need to ensure that we verify the receipt when the payment is done. Okay, it may look like a very rudimentary thing, but it is extremely important to verify the receipt once the payment is done. Okay, for online transactions, have one dedicated payment method. Okay, if you are technologically savvy, if you are used to digital payments, you can have multiple methods. But if you are not, and if you have some questions, then have a separate account and use it for your online payments only. Don't use it for anything else. Okay, whenever you are making a QR code based payment, check the QR code before scanning the QR. Okay, whether it's a dynamic QR, whether it's a static QR, check the QR code for what you are making the payment. Check the amount that you are putting in, if you are putting in the amount. Do not carry out banking transactions on public Wi-Fi. Do not provide your bank account details to anyone. Remember, banks do not ask for card details, CVV or OTP. Do not fall for social engineering. Remember, there is no crisis when it comes to banking. Do not respond to emails, calls, messages when it comes to sharing your banking information. Banks do not ask for it. Carry out your banking through your own internet banking, mobile banking, or trusted third-party apps only. Okay, and remember, when it comes to your banking, the buck stops at you. So with this, friends, I am going to close this panel and open for questions. So Namrata, over to you. If there are any public questions, please proceed.
Sure, Vaibhav. So there are 2 to 3 questions from audience. I'm just asking you the questions. So the first question from Yogesh, he's asking, which processes in online banking do you consider the most exposed?
Does anybody want to take the question, Satya, Dheeraj, or do you want me to respond to it?
Sorry, Namrata, can you just repeat the question again?
Yeah, sure. Which processes in online banking do you consider the most exposed?
I think the login page, which is the first front process, which is the most exposed thing right now at this point of time. Second thing are the APIs, which banking are basically regulatorily exposing, which is kind of the regulatory APIs, the open banking APIs, which is the second most thing, because these particular thing, every bank has got a developer portal, like something like Google and Facebook that you see. Every bank has this particular developer portal, which I will say is a kind of a second most thing. Although there are 7 layers of security on top of those APIs, but they are exposed. That means anybody can basically play around with these APIs and try to basically get their request flowing in, although they will not reach anything. But yes, that was my take on the exposed part. Anybody else? Vaibhav, Satya, Chirag?
So I agree with Dheeraj that the login page is extremely exposed page, and that is where some point of time, some a few months back, or couple of years back, in fact, regulations were brought in where you just don't need to put in your password, but there has to be some other factor of authentication as well. And some banks brought in those words that keep on changing. Some banks brought in a picture that you have to select and a slogan that you have to put in and so forth. And post that, it is extremely important, Namrata, that we as users make sure that the laptop or the PC through which we are actually logging in, or the device through which we are logging in, is a secure device. The network through which we are logging in is a secure network, and that nothing is getting recorded at the back end. We have to avoid public devices, public networks. Other than that, yes, APIs is a point of exposure, but APIs are extremely encrypted, so the risk slightly less over there. Satya, if you want to add anything.
I think Dheeraj have rightly pointed the login is the most exposed page. Process-wise, I think payment and settlements are the most exposed processes, because that's where most of the fraud happens. Even data also. So it might be very simple. So customer data, how, especially whenever we interact with third-party vendors or we share the data with fintechs, there also has to be provisions. Like even the cloud server configuration, the Capital One lost a lot of data details. It might be simple data details like the name, PAN number, or Aadhaar card, but that can be used to create social engineering or frauds, such kind of thing.
Namrata, any other question?
Yeah, Vaibhav. Second question from Yatin. He's asking, do small banks should team up to fight cyber attacks?
Why small bank? I think every bank should team to fight cyber attack. Because if not bring your kind of the bank reputational damage, it basically tell every bank that there are crimes happening, and we may need to think collaboratively with one particular what you call strength and force in order to fight this particular crime. This is the criminal offense, and that's everything should be basically thinking on that line that how can we avoid it, and coming up with the innovative technology and share it across with other banks also. This is what we have done. This is also something you should be doing it. And now there are regulations coming up with respect to that. There are third-party solutions which are coming up, which most of the banks are adhering to, which is providing what you call this kind of security, RSA 256 and HPAC 256 solutions, which are basically providing the security, end-to-end security, whenever you are going with any of your account information or doing a payment journey. So should not rely on the small bank. You should rely on basically topmost bank also kind of joining their hands, I would say.
Absolutely, Yatin. And let me tell you that, all small finance banks and payment banks, I talk on behalf of them, that, we are very strong when it comes to cybersecurity, specifically with respect to Equita Small Finance Bank. we are extremely strong on the cybersecurity front. We were recently awarded the best cyber secure bank in the country certification from an agency that actually, and that was across the banks, not just in small finance bank. It was for all the banks put together. Okay, so there were some scenarios that we had to put in, and out of some 15 scenarios, 12 scenarios we were able to successfully stimulate, and we preempt before the attack happened. We were able to preempt the scenarios and stop the attack, and even in the remaining 3 scenarios we had stopped the attack, and the second bank which came in was only able to do it in 2 or 3 scenarios. So small finance banks do invest a lot of resources, money and efforts into ensuring the cyber security. Yeah, Namrata, we can move on to the next question, please.
Sure, Vaibhav. So the last question from Sumit, he's asking what solutions are best to help mitigate cyber risks?
Okay, so when it comes to cyber risk, there are a lot of cyber risks that are there. Some of the basic solutions that we need to ensure, and I'm repeating what I said during the panel discussion. SSL encryption is utmost important. PCI DSS compliance, ensuring that 12 data security requirements are met is important. Tokenization is important. 3D secure authentication is important. FRM framework is important. Second factor authentication is important. Application security testing is important. Riding on trusted apps is important. From a hardcore, consumer perspective, avoid social engineering, avoid phishing. Man in the middle, be aware of what is man in the middle. Be aware of website spoofing somewhere, so on. Sorry,
Yeah.
Dheeraj, go ahead.
No, absolutely, you're right. Vaibhav, these are the technology terms that you should be aware of. Right now, when you do and make a payment to a grocery store, so how do you do it? You go to the grocery store physically, you meet the person, you buy the things, make the payment to the particular person. That means the person knows you, who's making the payment, person knows you, you have bought the product. It's not any person coming in between and buying the product on behalf of you. So think anything, any transaction happening, think in that particular way itself. So if you think that this particular kind of is a risky operation, think of video calling it, think of doing the video kind of authentication also in place. Think of what are the layers and modules that can give you the confidence that you are knowing your customer to whom you're making the payment. That should be the thought process when it comes to security. So there could be an enormous amount of technology solution that can be available. But then now you need to trust, and you need to basically build up like a whole kind of confidence among your app customers, saying, I think, okay, this is what we are doing in order to basically prove that your data is secure and the transaction that you're doing is ultimately secure. Yeah. Thank you, Namrata. Thanks, Vaibhav.
Thanks, Dheeraj. Thanks, Satya. Thanks, Namrata.
Thank you, Vaibhav. Thank you to all the other panelists for making this rich discussion. Before ending of the panel, I request all the panelists to smile so that we can take your smiling screenshot.
Now we're used to it.
Thanks, Vaibhav.
Thank you.
It's done, I guess.
Cheers.
Thank you to all the esteemed leaders for making this discussion rich with your thoughts. Now, I would like to hand it over to my CEO, Mr. Sandeep Anand, for announcing the results of top payment gateway providers.
Hi. Thank you, Namrata, and good evening, leaders. I welcome you to the India's most prestigious webinars and awards. And I will quickly take you through the India's top payment gateway providers, which have been voted by hundreds of leaders like you. So can you bring up the slide, please? Okay. Yeah. So we did research on payment gateway providers currently available in India, feedback from hundreds of leaders, and then voted by hundreds of leaders. So two key parameters which were important in choosing the payment gateway providers were vendors' vision, which is essentially can they develop a futuristic solution? What is the foundation of purpose, strategy, innovation, financial ability, technical ability, market responsiveness, and reach? How much reach they have, and usability, user efficiency, effectiveness, the customer experience. I think these are the key features which when leaders like you decide what to buy, you think on these two parameters. That's what the leaders have given us feedback. And quickly coming to the top 8 payment gateway providers of India, the leaders which have been voted are CC Avenue, Builders, Paytm, Google Pay. Innovators are PayPal, PhonePe, Amazon Pay. Then we have specialists, which are PayU, Razorpay, MobiQuick, and then we have core solution, JustPay, ZackPay, and CashFree. These are India-specific solutions voted by top leaders of India who are in BFSI sector, who use payment gateways for their companies for their own purpose. Thanks a lot, leaders. Thanks for being part of this India's most prestigious, voting for payment gateway providers. I understand many of you have also voted in that. Thanks a lot. Over to Namrata.
Thank you, Sandeep.
Hey, Ashish.
Now, the most awaited moment of the evening has come to an end. A precious moment to celebrate success and innovation. Inflection Awards are India's most prestigious awards in technology, marketing, cybersecurity, organized by Auden Global Value Advisors. Today, 150 plus CXOs and 50 plus attendees are watching this live on our website. Let's start the celebration with first award for BFSI Technology Leader of the Year Banking 2021, which goes to Mohan Kumar Venkatesan from Axis Bank. I request Mohan to come and receive the award and speak 100 words on his achievement.
Thanks, Amrita. Hi, everyone. Good evening. So, I'm in the IT industry for more than 20 plus years now. So I worked for organizations like Accenture, IBM, Capgemini, and some of my previous stint. And today I'm part of Axis Bank. So I had IT infrastructure and as well as an application service and end user support service function also. So coming to the technology things, every organization where I've been part of it, I will see that every organization's needs, there are certain areas of improvements and certain areas of growth part. Definitely you will have your own space to make the difference. So in Capgemini days, I kind of grown up one of the very important technology vertical called storage and backup. Grown up the team of 5 to 750 plus people in a short span of time of around 4 to 5 years, and adopted many technology transformations. Hyper growth initiative is one of the major transformation initiative which has been identified and implemented on the ground by me, and which is a global news it is. So that is one of the initiative. In Wipro Technologies, if you say, there is a technology service group which is strategized and formed, and there is a technology governance is something which is very vital to help the business functions to operate. Yeah, there I kind of contributed and strategized and formed this technology vertical group, and that function is kind of the framework and the model how it should function. So all those things to bring more customer satisfaction and the business benefits. So it has been strategized and formed. Today you will get to see that TSG Technology Service Group when you get to see anything in Wipro, when you kind of associated or you work for, I'm the person behind that. So similarly in controllers, controllers and Cloud4C, where I was part of it, there is I kind of strategized and brought many workload onto the public cloud environment, AWS and Azure and all that. So I'm the kind of a founder on the bringing that cloud framework and the model in that play. So I joined Axis Bank in the month of April. So here, so from a service delivery point of view, today what major things which I'm driving is bringing more resiliency in the data center space and technology standardization and bringing more process and other improvement areas. So these are the things, something which I'm kind of core in and bringing. So taking Axis Bank to the next level of customer satisfaction is my way of looking into the transformation and technology journey within the business side. So that's from my contribution to the organizations. So thanks for recognizing me, Amrita and team here. So thanks for this, everyone, the good audience here. Thank you.
Congratulations, Mohan.
Thank you.
Great show.
Thanks.
Namrata, you are on mute.
Sorry. Congratulations, Mohan. Kindly smile so that we can capture this happy moment. Thank you.
Thank you. Thank you, everyone. Thanks.
Next award for Best Landing Platform MSME 2021 goes to HDFC Bank.
Hi.
I
Thanks,
request Chirag
Namrata.
Jain to receive the award and speak a few words on this achievement.
Thanks, Namrata, for recognizing the efforts which we have done over last few years. So the overall objective for building the digital lending platform was to build a granular book and provide an instant sanction of the working capital to the smallest of the businessmen, so that on the fly, on the spot, our RM can give a comfort to the customer basis their information details, fetch it from the financial ecosystem, and instantly run a big business rule engine. So the objective was to have a customer delight and as well as improve the sales productivity, and also make sure that the journey is so simple, so customer focused, that even if someone comes from any of the platforms and decides to do the journey on their own, still they are able to get an instant sanction. So it was a great team effort, and we are really happy to assist with that. Thank you, Alden Global.
Congratulations, Chirag.
Thank you.
Congratulations, Chirag.
Thank you.
I request you to smile so that we can capture this moment. Thank you.
Thank you.
There's a lot of disturbance. Can I ask everybody to be on mute?
Next award for Most Innovative Digital Leader of the Year, Small Finance Bank 2021 goes to Vaibhav Joshi from Equitas Small Finance Bank. I request Vaibhav to come and speak few words on his achievement.
So thank you, Sandeep. Thank you, Namrata, and thank you, Team Alden, Ria, for this honor of this award. It feels great to get this award. I joined Equitas 10 months back, and in this 10 months, we have had some industry first innovations. We launched India's now largest neobank, which is NeoX. So the fastest and the largest neobank in the country. Was that we launched an industry first, fixed deposit through a third party app on Google Pay and Setu, which was in the news across newspapers. So I think, we are poised in the neobanking, open banking space. We are poised to become the industry leader. And there are some interesting programs that are there. On the digital payment side too, there are a lot of efforts that have been put in at Equitas, and on the transformation side, there are a lot of new initiatives that we are taking in. We are getting into mod banking, we are getting into social media banking. On the digital channel side, we have initiated video banking, video KYC, and so on. We were one of the first adopters of video KYC in the country last year when it was launched, and then due to the broken journey process, we had to stop, and now we have restarted. Other than this, I think there is an excellent team that I have. This team has worked with me in my past organizations, and they have followed me to Equitas as well. So riding on that team, riding on riding on the confidence that my MD gives me, I think Equitas is there to stay, and in our journey of converting to a universal bank from a small finance bank. I hope that we end up getting a lot of more of these awards. Thank you, Team Mandal. Thank you so much.
Congratulations, Vaibhav. I request you to kindly smile so that we can take a smiling screenshot of yours. Thank you. Next award for Marketing Leader of the Year, Financial Services 2021, goes to Vishesh Sharma from Angel One. I request Vishesh Sharma to receive the award and share his views on this achievement.
Hello everyone, I hope all of you are keeping safe and healthy. These are tough time, and we need to be careful about how we operate. Thankful to the team, Inflection team, for this wonderful honor. I'm truly humbled, and this, right now I'm reminded of a Urdu couplet which says, अकेला ही चला था जानिबे मंजिल मगर लोग जुड़ते गए कारवां बनता गया. So to be honest, if I say that this award is on behalf of the entire team, the wonderful minds who have worked with me, whether it's from my content team or Devika Analjit, who are part of my startup team or my Corpcom team. So all of them have contributed immensely for me to be eligible for this award. So I'm accepting this award on behalf of each and every team member of mine, plus my wonderful boss, Mr. Prabhakar Tiwari, who's the Chief Growth Officer of Angel One. So he has also played a key role in shaping me to, in becoming the leader who's accepting this award today. And that's all from my side. I hope and pray that, all of us stay safe and keep growing in the field, and keep learning from each other. Thank you so much once again. And Namta, you don't have to request me. I'll smile for the snapshot because I'm very happy with this award today. Thank you.
Congratulations, Vishesh.
Thank you.
You deserve a bigger smile.
Thank you, Vishesh.
Thanks.
Congratulations.
Thank you so much.
Next award for Women Leader of the Year, Information Security Banking 2021, goes to Babita from CSB Bank. I request her to come and receive the award and share her thoughts on this achievement.
Yeah, thank you, Namrata. It's great honor to receive Inflection Award. I take this opportunity to thank Alden and NASCOM for giving me this award. I thank my management and colleagues who have supported me to achieve this award. And creating a cybersecurity culture in the organization and to provide secure banking to my customer is our motto. Thank you once again to all, and thank you for the support.
Congratulations, Babita. I request you to kindly smile so that we can take a smiling screenshot. Thank you. The last award for the day for Best FinTech of the Year, Financial Services 2021 goes to Angel One. I request Vishesh to come and receive the award.
Once again, thank you so much to the wonderful team at Inflection Awards. And I'm really happy for this award for a very simple reason that, when I joined Angel about 2.5 years back, so at that point in time, we were fighting a perception battle, despite having a solid, robust infra in place, despite offering, good digital ecosystem. We were never seen as a digital player. And from 2 years back to now, when we are largest listed stockbroker in India and one of the largest digital broker in India, to getting this award, which says best fintech, because we have a very clear-cut vision that we want to be India's #1 fintech in next 2 years. Getting this award from NASCOM, validates our efforts and substantiates the kind of direction we are taking. So this will motivate not only my team but everyone at Angel to basically keep delivering on the best fintech experience for the millennials in tier 2 and tier 3 cities. So thank you so much, NASCOM team, Inflection Award team. Thanks, Atan.
Congratulations, Vishesh. I request you to kindly smile. Thank you.
Thanks.
Congratulations to all the awardees out there. Thank you, top leaders and delegates, for sharing your contribution and making this rich discussion. Hope you all will be able to carry the thoughts for the day to build a robust roadmap and strategies. See you at our next InsurTech Web Conference and Awards. Thank you all. Have a great evening.